All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Welcome in, all afraid. Yes, we're going to talk about this comment you just made: 3 waves down, 3 waves up, B flat target hit. We're going to talk about this right now. This is one of the primary topics of the stream today. Crypto Wanderer 1, welcome in. Yes, please smash the like button on the way in, guys. If you get any sort of insight into the market today, please smash that like button. Please share the live stream with anyone you think might find it interesting, and subscribe to the channel. Quiles 1100, welcome in, man. Thank you so much for being here. Andy and R Pink, thank you guys so much for being here. Thank you for modding. And what is up, guys? Tuna Melt, it's good to see you, man. Yes, let's make that money. So, guys, yesterday in the live stream, in the video yesterday, I did tell you I took a long once we reclaimed 84.6, that naked daily point of control that we hit into. And I said it was going to be a scalp long, just looking to come up to the 382 or to the 0.5. And I would leave a little bit of it open just in case. So I have taken 75% profit on that long position. I also got stopped out on my short position from up in this general range here after a TP1 of 50%. So no short. I'm no longer in any short positions on Bitcoin. I am still in that scalp long position. But what is happening here with Bitcoin? Because Bitcoin is seeing a pretty aggressive pump to the upside today, and we are bouncing from a higher low on the charts. But overall, guys, we are still in our larger downtrend with larger bearish divergences confirmed, also breaking below our key Fibonacci channel, our key anchored VWAP, and our key value area low of the range. And closing a daily candle back above these levels would be bullish and could mean this was a little bit of a fake out, and we might be able to see a bigger rally to the upside, potentially to come take out 107K. But as far as our primary count goes right now, it is still a bearish scenario to be more likely. So if we're looking at our double 1-2 impulse from the all-time high, we have our wave 1 here, a wave 2, we have an internal wave 1 and an internal wave 2. Because there was overlap between the lows of 1 and the highs of 2 here, you have to classify that as a double 1-2. Our move down from 107.5 to 80.5 was our third wave. So now we're looking for a fourth wave corrective move in here before potentially seeing another 5 impulse to the downside, followed by another fourth wave, and then another 5 to the downside here, looking at finishing that double 1-2 impulse. And that is our highest probability still on the daily time frame based off the volume on the dump and the loss of some key support levels that we've had on the charts. But here's the thing. We bounced from 80.5 last Friday, November 21st, or a couple Fridays ago. We saw this, let me hide this range here. We saw this little ascending channel, and we were trading very nicely within this little pink ascending channel here. We came up and we actually bearishly backtested our key areas of resistance, and we dumped yesterday. We came down to our local golden pocket and naked daily point of control, and we're bouncing, and we're coming up to our highs again from last Friday, from a couple, 5-6 days ago. And one of the things that I'm looking at here now, because we did see a 3-wave corrective move down, so we can actually look at this whole larger range that is forming underneath our Fibonacci channel as a potential flat sideways correction in a bigger wave 4. And remember, I talked about this many times, but your wave 2 correction lasted about 10 to 11 days here. And your wave 4 is generally as long as or longer than your wave 2 corrections. And this high here was only made about 9 days in. If we are looking at now, because we created what looks like a 3-wave corrective move here with a little flat in here, move to the upside, followed by a 3-wave move down, now we're going to be looking at another impulse up in a WXY correction. So if you have a series of 3-wave moves, 3-wave move, 3-wave move, 3-wave move, that is a complex correction, a WXY correction. And we're looking at that WXY correction. Some of the targets lining up for that WXY correction are very, very interesting. But yesterday in the video, I talked about our local structure. So this move down that we saw yesterday. And within this move down we saw yesterday, I said we were looking at a potential 5-wave impulse, a wave 1, a wave 2. This was all a wave 3. We were looking to reject between our 382 and our 0.5 Fibonacci for a wave 4 to see one more push down in a wave 5, potentially to take out your 80.5K lows. But we have now invalidated that impulse to the downside, because if you pull a Fibonacci from the highs of wave 3 to the lows of wave 3 and you turn on that golden pocket, the second you hit this golden pocket, you invalidate that impulse to the downside. And the second we hit this, I came into the Telegram earlier today and said, guys, we have now hit the golden pocket. I'm expecting to come up to take out our 93K highs. So I did let you guys know that more pumpage was possible as soon as we hit this golden pocket earlier today. That was a few hours ago, 6 hours ago or so, 5 hours ago. And we are now pushing up to come up to take out these highs here. And in this bigger flat correction that we could be seeing in here, this bigger WXY flat correction that we could be seeing, a W here, an X here, and a Y wave potentially coming up to our target for the fourth wave. And I want to show you guys something very interesting here. So first off, we need to grab the liquidity. We do have some liquidity. You can see here just above the highs from last Friday. Liquidity resting right above those highs, but just a little bit higher, right around 94K. If we look at our wave 4 targets, pulled from the highs of wave 3 to the lows of wave 3, and we turn on between the 382 and the 0.5 Fibonacci. Let's go ahead and, where's that at? Right there. Okay. So between the 382 and the 0.5 Fibonacci. And if we look at that 0.5 Fibonacci, it is coming in right at 94K. Well, also, if we pull a trend-based Fibonacci extinction from the lows of your W wave to the highs of your W wave to the lows of your X wave, and we look at our trend-based Fibonacci extinctions, our really key target of a 786 Fibonacci is coming in exactly at that level as well. It would also grab the liquidity from the highs of our W wave and be a target for a bigger flat correction in here, getting everyone bullish, everyone longing near the top of this range here, the top of this bigger sideways range here, before ending up dumping it down in an impulse to the downside in our bigger fifth wave on the daily time frame. So this is one of the bearish scenarios that I'm looking at still, and I'm looking at this with some decent probability still to play out. Within your Y wave, you often get that impulse to the upside. Within this Y wave, you get that 3-wave corrective move, an ABC correction, and your C wave is generally an impulse ending on a high amount of volume. And with oftentimes taking out the highs of your W wave. Now, it does not have to take out the highs of the W wave, because we did hit a key Fibonacci target down here, and we could make like a lower high or sort of like a double top in this area. But I am looking at coming to take out these highs just based off of our local, what we're seeing on the charts here locally. It does look like we are going to come up to take out that 93K high, and looking for a couple different things here. So we have our key liquidity resting around 93,200, let's say 93,200. You can see taking out those highs would be another higher time frame bearish backtest of our Fibonacci channel. So if we come up here during the stream and we SFP this high, I will look to enter short off the confirmed swing failure pattern. But I'm also looking at coming just a little bit higher, seeing a hit into 94K, and then if we lose 93.2K after hitting into 94K, I will also look for a short here as a peg short, because remember, I'm still long from down in this area. I have taken out 75% profit way freaking too early, but I took some out, and I will look to continue to hedge a short against that, knowing that the overall larger perspective bias on the daily time frame is for more downside. Wave 1, wave 2, wave 1, wave 2, a big third wave, fourth wave, fifth wave, fourth wave, fifth wave. We need this impulse to the downside to complete, which is still the highest probability. Remember, our money flow is still leaving out of the asset. We did print hidden bear divs on the highs on Friday when we came up to bearishly backtest that key Fibonacci channel. And so this is a couple of the different scenarios I'm looking at. Now, let's go into our bullish scenario, because as traders, we need to map out both scenarios and trade whichever one comes, because there is a possibility that we could pump straight up through this and the invalidation for our daily impulse to the downside. Let me zoom out to the 8-hour chart. So, and let me go ahead and hide some of this smaller targets here. I'll leave that on there for now because that's going to be important. So the invalidation for our larger impulse to the downside from the all-time high that it looks like it's incomplete, this impulse here that looks like it's incomplete, is hitting the wave, the golden pocket of your wave 3. And remember, our wave 3 is from the 107.5K high down to the 80.5K low. So if we put on that golden pocket, you can see that golden pocket is coming in right around 97K. At 97K, if we hit even the 618 of this golden pocket, it will invalidate the impulse to the downside. And we will have to look at this as more of a complex corrective move, maybe even a WXYXZ, which is a very rare complex corrective move. But we would have to look at that as a finished corrective move, and we might be about to impulse up here, at least to come up to our golden pocket pulled from the all-time high down to the lows, coming up to 108 to 110K, taking out the highs of our 107K area and grabbing liquidity of those highs into your golden pocket. Now, we have a lot of work to do on Bitcoin before then. Once again, guys, I do think it is more probable to form a range below our Fibonacci channel in a kind of flat corrective move for a wave 4 before ultimately dumping down in a wave 5 and coming to take out your 80.5K lows. So this golden pocket is our invalidation at 97K, but you can also see if I pull that same trend-based Fibonacci extinction from the lows of 80.5 to our highs that we made last Friday to our lows that we made yesterday. You pull that trend-based Fibonacci extinction, the 786 of that Fibonacci extinction is at our 0.5 wave 4 corrective target. Our 1-to-1 Fibonacci extinction, which is also a common area to end a corrective move, a WXY or even an ABC, is between the 1-to-1 and the 1.236. Well, you can see that 1-to-1 Fibonacci extinction is coming up just about where our golden pocket is. And man, you know how crazy, I think this is less likely, but it would be crazy to see us come all the way up and hit into that 1-to-1 Fibonacci without hitting your golden pocket and then dump here in a wave 5. Technically, it would not invalidate. Even if you came up to 96,950 and rejected from that 1-to-1 without hitting 184, you would still be valid for that wave 4 impulse to be the highest probability, or a wave 4 corrective move to be the highest probability. But I do think if we do break above 95K, and I'm going to explain why 95K in just a second here. But if we break above 95K, I'm pretty much going to call an early invalidation on our impulse to the downside. Technically, it won't be invalidated till we hit this 97,184. But I think if we break and close a daily candle above 95K, then I do think we are going to invalidate that. And one of the reasons why, if we go on to our Bybit USD chart, this Bybit USD chart has been the second most chart that I follow volume levels on. Of course, you guys know me. If you guys have been watching me for a while, Coinbase is the main chart that I follow, but then Bybit is the second main. If I'm looking at another volume level from another exchange, it's going to be Bybit USD chart. So on the Bybit USD chart, you can see right at 95K, we have our anchored VWAP from the 49K lows. It's a little bit higher than our anchored VWAP on Coinbase, which is around 91.5. So it's a few $1,000s higher. And if we zoom out onto the daily time frame and we look at this larger pitchfork that we have been perfectly trading in the entire year of 2025, creating a distribution range at the top, coming down to the bottom of the pitchfork, bouncing at the bottom of the pitchfork at our 80.5K lows, we are still closing weekly candles below our key anchored VWAP here. And what I would like to see happen if we are, as a last hope for this double 1-2 impulse bearishly to play out, is a rejection from that 95K area, because it would not invalidate our impulse to the downside. Yes, it's above the 0.5 Fibonacci, but it's not quite yet hitting our golden pocket pulled from the highs of wave 3 to the lows of wave 3. It would not quite hit that golden pocket quite yet. So 95K is pretty much the line in the sand for me. If we break above 95K, I'm going to say, even though technically this impulse to the downside has not been invalidated, I'm pretty much going to be calling it. And in that scenario, guys, as the bullish scenario, now we've covered our bearish scenario. Our bullish scenario here on the charts, let me go ahead and get rid of some of this stuff on the chart here real quick. Our bullish scenario for Bitcoin is that we have been trading within this Fibonacci channel for the entire bull run, with the levels being highly, highly respected. But at times, you will see fake outs of a major part of the channel. You'll get back in, flip it to support, and work your way up to the next major channel resistance, trend resistance. So if we can get back in and close our weekly candle back above really 93K, I do think this could have been a fake out of our bull market trend. We're getting back in, we're closing a candle back with inside, and we might be able to pump up to hit our 110K golden pocket, 108K to 110K golden pocket, and potentially even make new all-time highs. So this is the bullish scenario. And what we want to see, first of all, on the daily time frame right now, as we're speaking, we're seeing a very nice bullish engulfing candle. You can see the green candle has engulfed our entire red candle from yesterday and is right now at least closing, or we're not closing right now, but if we close today above that candle, it will be a bullish engulfing candle. And that is a very bullish sign that you might see some continuation to the upside. What I am worried about, though, is just seeing the fake out here, seeing that range form around the bottom of this area before ultimately dumping it and losing it to the downside. And we did see something very similar to this. I think that was on Ethereum when, let's see, I'll cover Ethereum as well, guys. One of the coins here, we saw a little bit of a range form underneath the key breakdown of the pitchfork. We got back inside it for just a day and then lost it, and saw continuation to the next major pitchfork support level. So this is kind of what I'm looking at, guys. This is our line in the sand. Now, if we can close our daily candle back above really the highs from last Friday, if we close our daily candle above the highs from last Friday, it's going to be bullish, and I do think we will see some continued push to the upside. Let me check the chat here. What is up, everyone? Welcome in. TMB Willa, thank you so much for being here. Tiki Taku, welcome in. 578. Hi, this is not convinced me the bulls. Yeah, also famous V-shaped recovery. Yes, it is, but it's, once again, it's like a low time frame V-shaped recovery from yesterday. And yeah, we do see those, and you often see those at the end of a corrective move. That last C wave or Y wave often tends to be impulsive, getting everyone to long, particularly in the second half of this wave to the upside. And then that's fuel when we do dump, that's fuel to really push the price down pretty aggressively. So, yeah, we'll see how this plays out, guys. We're going to see during the stream, we're going to see if we can't take out that high. We're going to see if we can't get a potential SFP short or at the 94K short. But yeah, it's looking interesting here. Let's see, 1996 MJ, welcome in. Thank you for being here. Rui official. Yeah, we are rocketing right now, man. And here's the thing, until we start to see some sign of strength on a sign of weakness on low time frames for this, we have to say that this could keep continuing. You know, money flow does look pretty bullish on the 4-hour chart right now. On NAMI, it's crossing over into the green here. Now I will say this, look at, we are setting up for some potential aggressive bearish divergences on the chart. If we do reject from the SFP of 93.2 or even up at 94K, if we come out, we take out those highs up into 94K, you can see that we would develop a pretty aggressive bearish divergence on the 4-hour time frame on Market Cipher B. Now, by then, we would want to see that money flow start to curve over here as well, and that would give us a confirmation that this is probably a corrective sideways and up range before dumping to the downside. Another thing that I'm looking at with this sideways and up range here, so anytime you make a low, make a high, and then bounce from your general golden pocket area, which we did here, you can pull an ascending channel and look at that trend. Because if you're looking at, so we're going to pull it from the low to the high to the low here, and if we're going to break out, if this is going to be bullish, a wave 1, a wave 2, Your wave 3 is going to break through that channel, and it's just going to break straight up to the 1.618 Fibonacci extinction. Then your wave 4 generally retraces, sometimes all the way back to backtest that channel, and then you get your wave 5. Now, if it is a corrective range in here, that kind of ascending channel that is going to build some liquidity before dumping to the downside, you will often reject from the top of the channel here. And depending on time, how long this takes to get to the top of the channel, but you can see it's coming in around that 94.5 to 95K area, which is where the anchored VWAP on Bybit is. And let's just go ahead onto the Bybit chart, and we will throw on that ascending channel. You can see that as we come over to this area, maybe, in a day or two, it would be the top of the channel in confluence with that anchored VWAP. So we'll have to see how this plays out, guys. We'll have to see. We are at our resistance area again. Okay. Jaffiel, welcome in, man. It's good to see you here. Hope you are doing well. I think we have a bottom on super. Check out that displacement candle, or you still think lower. Yeah, we'll check out super in just a second here, Jaffiel. Thank you so much for joining the stream. Thank you for being here. You're really waiting for 97 to 98K SFP to short. Okay, so 97 to 98. Yeah, so I see what you mean, because we have all this kind of liquidity trail that built in here before this last dump down. Now, remember, if we come up and hit the golden pocket between 107.5 and 80.5, it's going to invalidate our impulse to the downside. It's going to be more likely to be completed, right? This entire double 1-2 impulse from the all-time high. Wave 1, wave 2, internal wave 1, internal wave 2, 3. If we do come up and hit that golden pocket, that means that this structure is most likely completed in a complex correction. But it doesn't mean that we won't reject from this area. We're probably going to see some sort of small rejection to come back down and back test your range highs, these kind of range highs in here. So you still could get a scalp short position from 97 to 98, all the way down to like 92K or like 91K. And then you would be looking for another high in here. 1-2, 1-2, big third wave here. So that is what we'll look at over this week and over the next week as this develops, as this data on the chart develops. So yeah, we could absolutely grab all this liquidity, this internal liquidity within here, and dump a little bit. But I would expect a higher low. If we do come up to this golden pocket and reject, I would expect a higher low before making another higher high. Okay, everyone would be bullish then, FOMOing. Yes, everyone would be bullish FOMOing. And there looks like right now we're starting to see some FOMO towards the top of this pump today. You were in Casper's live, didn't see you were live as well. I just, no worries, for Iseki. I just started like 20 minutes ago, so no worries. I saw that Jason was live too. I was watching his live stream a bit. And I know Jason is bullish, guys. I know that Jason is looking bullish, looking up to come up to 97K and looking to come up to potentially even 107K. Now, Jason does not study Elliott waves, and he does not trade with Elliott wave theory. The reason why I still lean more macro bearish is because, first of all, we are still below our Fibonacci trend line that we broke down, of our entire bull market support that we broke down from. But also, on this dump to the downside, we did see massive increases in volume on the dump to the downside. Massive, massive increases in volume. Look at, during this entire dump to the downside, you really see volume increasing during this entire dump to the downside. That is less likely to be a corrective move. If you see volume increasing on a dump, that it makes it less likely to be corrective and more likely to be impulsive. And also on this push to the upside, so far this sideways range that we're potentially going to form here, on this push to the upside, volume overall is decreasing here. So increasing volume on the dump, decreasing volume on the corrective range that we're seeing now, it does make it still more likely, not only in terms of Elliott wave theory, but in terms of volume trading. And remember, volume is one of the most important things to analyze in the markets. In technical analysis, it does look like we could be seeing a flat correction in here before continuing this impulse to the downside. So that is what we're looking at. Do I know what's going to happen, guys? No, I absolutely do not know what's going to happen. As traders, we do not have to know what's going to happen. We mark out the scenarios, both scenarios, a bullish scenario and a bearish scenario, and we trade whatever comes. So, I was short from up in this area over the weekend, 91.9K. I ended up shorting around 92K. I did tell you guys I was going to take profit at that naked daily point of control at 84.6. I also said yesterday in the Telegram, guys, we're right now below the 84.6 naked daily point of control. But the second we reclaim that, I am going to enter a scalp long opportunity because we did see some bull divs on the chart. And I did. And I did take some profit way too early at the 0.382 and 0.5 Fibonacci, 75% of that long position, but I still have a long position open. Now I've gotten stopped out on the short position from up here, but did I know what was going to happen? Did I know that we were going to bounce here and make a new high potentially? No, actually I was looking at a 1, 2, 3, 4, 5. I was looking at actually coming down to take out these lows yesterday, if you look at the video yesterday, but I still took a long from here because I saw confirmation into our support level. Did I know we were going to reject up here last Friday? I said it was likely because this looked like a distribution range, but I did not know. But we saw our confirmation, and based off of our larger bearish structure, it was likely that we were going to reject there, so I shorted there. And, even though I got stopped out after 50% TP, I still made money on that trade. Right now, here, even if we, I plan to take some more. I plan to close the trade if we SFP 93.2, but if we come up to 94 and reject, and then lose 93.2, I'll close out that long position from down here, expecting new lows to come in on the charts. So as traders, we do not have to know what's going to happen. You mark out your key levels of interest. And this is where, for me, Market Cypher B and NAMI come so much handy, because you mark out your key levels. And then once you're getting up to that key levels, now you can come down and look at your confirmations to either enter or exit the trade. So I look at Market Cypher B, I look at NAMI, I also look at your CVD and open interest for any CVD divergences on the charts. And then I look at the liquidity to see if we're taking any liquidity, anything like that. So, yeah, guys, I think that we don't have to know. We just let the scenario play out, let it play out, set your levels of interest and let the market come to you. Once you're there, now you can analyze the charts and say, am I going to take a long or take a short? But with our higher time frame analysis, remember the higher time frames bias always will kind of trickle down into the lower time frame bias overall, right? Now, you're not going to, like I said earlier in this week, by the way, I said, guys, it looks like we're likely to dump down to 78K, but we're going to see small bounces along the way. That doesn't mean we're going to dump straight down. The market moves in ebbs and flows and waves, up and down. So, of course, you can scalp these positions. You can scalp these positions. And range trading, which if this is going to be a sideways and up range here, trading this range until it breaks is an absolutely genius thing to do. Why not scrape a little bit of money from the market while you can? And leave a little bit open. Say you're short from up here, you're long from here, or even long from down here or anywhere in this general area. Now you're hedged both ways. Sure, one of them is going to get stopped out, but you're in a trade. You're going to be in profit either way. And that's how, as traders, we scrape a little bit of money from the market every single day. Now, I want to talk about one thing real quick. Let me go ahead and read the rest of the chat real quickly here. And then I want to show you guys the total market cap. I want to show you guys Ethereum. If you guys watched my video yesterday on Ethereum, I also went long on Ethereum. I am still long on Ethereum. And I want to show you guys Solana as well. I want to show you the total market, total 3 market cap as well. So we have a lot of interesting stuff to cover within this stream. Really quickly, before I cover that stuff, guys, I do want to shout out the partners of the channel. BYDFI is the main partner of the channel. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. And if you do sign up using my affiliate link in the description, you can get a minimum of 20% discounts on trading fees, and you can actually earn up to 40% discounts on trading fees if you deposit some of the larger whale amounts into the exchange. They're offering up to $8,100 in futures trading bonuses, depending on how much volume you move in those futures derivatives markets. And they are offering some of the best initial deposit bonuses in the entire industry. So if you deposit $100, you'll get a 50% deposit bonus, which is the highest I've seen of any exchange on a $100 deposit. And then they're offering various 20% and 10% deposit bonuses if you deposit some of the larger amounts. Also, I have partnered with BYDFI to create that Telegram community. I talked about that earlier today in this stream, how I told you guys I was going to long yesterday, first of all, 84.6. And when we hit the golden pocket earlier today, I told you that it's likely we're going to come take out these highs or come double top around this area. And if you're interested in joining that Telegram community, it is free. All you need to do to sign up is join BYDFI using my affiliate link and deposit at least $100 into the exchange. Now, once you've done that, you can click the Telegram link in the description of this video. Once you're in the Telegram, type in /verify in your user ID, which will be right up here. It's probably going to be a string of letters and numbers for you. And then you're in the Telegram. And once you're in, guys. I do post my thoughts on the market. You guys can ask me questions on altcoins. If you do ask me a question, be sure to tag me with the @ because I sometimes do not see it unless you tag me. But if you want to join, please welcome. Links in the description below. The next partner of the channel is NAMI, guys. And NAMI is this momentum and money flow indicator that I do use for confirmations. Like I said, we map out our key levels of interest. And once we get to those levels, now we come look at our indicators to see if we have confirmation to enter a trade, exit a trade, or stay out of a trade. And for me, it is a very, very helpful tool. It has increased my profitability massively. To me, it's an investment in the tools of the trade. Just like if you're a carpenter, you invest in the proper tools to do your job. So for me, this is one of the tools that I use to do my job as a trader. If you're interested in purchasing NAMI, I do have a 50% off discount code. The link is in the description below. Divine50 is the discount code, and the link to the website is in the description below. And then lastly, I do have 2 other exchanges I'm partnered with, Bybit and MEXC, both offering some initial deposit bonuses, some futures trading bonuses, and discounts on trading fees. So if you're interested in signing up with either of those exchanges, it's a way to help out the channel. It's a way to say thank you. And I just appreciate you guys. So let's get back to the TA here. First, I want to read our chat. Looks like a 1-2 setup. Yeah, we from the lows, are you talking about Tiki Taku? We could be in a double 1-2 impulse on low time frames from our 80.6, 84.6, excuse me. But this also could be like a wave 1. This is a flat correction in here for a wave 2. And this could all be part of a third wave here. And then we're going to see a 4 and a 5. And that would make sense. In your Y wave, you're going to impulse up here and take out your highs. Or really, if it's a WXY correction, remember, we're looking for a larger 3-wave corrective move, 3-wave corrective move, and a 3-wave corrective move here. But within this last 3-wave corrective move, this is where it gets really confusing as an Elliott trader. You're looking for an ABC 3-wave corrective move within the Y wave, right? Within the Y wave. But your C wave is an impulse. Always. Your C wave and your A wave are always impulses within an ABC correction. And there is a way to count this first move here. A wave 1, wave 2, wave 3, wave 4, wave 5. You have your flat correction here in the wave B. Wave 1, wave 2, wave 3, wave 4. We could be in a wave 5 here. So there is a valid count for this on lower time frames to be a larger ABC correction with the impulse ending in C in a high amount of volume. Remember, C wave impulses often end in a high amount of volume at your resistance. So there is a way to count this as an ABC correction within your bigger Y wave. Okay. Let's see. C train. Absolutely, man. I'm happy to explain anytime. Let me know if you have any questions on anything. I can answer anything that you're unsure on, or maybe, just let me know if you have any questions. And that applies to all of you on the stream here. Told another stream that the best long is 84K. Nice. Okay. Yeah, 84K was a very key level. Remember, it was a daily level down there and a naked daily point of control around 84.6. Now, yes, we did wick down a little bit past it to 84K. So if you grab that long, great job, man. That is awesome. R Pink, thank you so much for posting the link. So guys, the link to NAMI is in the chat now. R Pink has posted that. Thank you for that. Do you mind explaining what the concept of a swing failure pattern is? Yes, I absolutely can. So you can see here within this range that we were developing over the holiday weekend, this range, what was it? Thursday through Sunday, Wednesday through Sunday. We were in this range here and we made a high here and we did see bearish divergences. And we also came up into some key resistance and finally hit the back test of our Fibonacci channel. So a lot of people that were watching, sorry about that, a lot of people that were watching that level took a short in this general area, right? We saw shorts coming in here, successfully pushing the price down. Now, if you shorted actually anywhere within this range, your stop is going to go above that high because your invalidation, your higher time frame trade idea is that we're going to reject on the bearish backtest and make new lows, right? Coming down to your next major support level. So if your trade idea is to short the bearish backtest, and let's just throw it on this high here, to short the bearish backtest of this area, targeting the next major support level, your stop, your invalidation for that trade is going to be above those highs. Because if you take out your range highs and you continue pumping here, then your trade idea was wrong and you need to get out of this trade, right? So this is a 7-to-1 risk reward ratio. That's a great trade. That's about the trade that I was in and looking for. Now, an SFP, a swing failure pattern, is when you fail, when you're dumping here, you make a higher low. We made a higher low at the golden pocket, right? But you're coming up to take out this high because the market makers know that a lot of people that shorted within this entire 5-day range, their stops are right above that high. So there's a lot of liquidity up there. It's called the liquidity hunt. And the market runs off of two things, volume and liquidity, with liquidity being the most important thing in the market. So a lot of times the market makers within a bigger corrective move will come up and stop out those stops. So you come up and you hit the stop loss, stopping out all the shorts that shorted this entire range. Now, at the same time, you're getting a bunch of people to long towards the top of this pump. And now that you've stopped out and grabbed that liquidity of those highs in here, the overall trend can continue. Remember, the trend is your friend, and the overall larger trend is down. So now a swing failure pattern is pretty essentially a fake out of a swing high or a swing low, stopping out the liquidity of the local traders and then continuing the direction of the overall trend. And so that is what a swing failure pattern is. So we're looking for, and how you trade a swing failure pattern is with your candle, as your candle is coming up to that high, in this case, 93,162, let's say, you're coming up to this high, you want to pierce above that level, and you generally want to pierce above it by a couple $100 on Bitcoin, or like, a 1/4% or so, or whatever. You pierce above it, you stop out those shorts, and then the second you start to fall back underneath it, and, some people wait for a 5-minute candle close. Some people wait for a 15-minute candle close. Some people wait for an hourly candle close, depending on your risk tolerance there. As soon as you start to close a daily candle, or not a candle, your candle starts to fall back below this, then you can enter short. And here's how you trade that. So say it was our price action here. So we're starting to fall back underneath it, right? Now your stop loss is going to go above the new wick high, because remember, there's going to be stops above there, and you're going to be targeting. You could even look for an SFP of this low, so you can take some profit, because remember, guys, liquidity is the most important thing that runs the market. So you could even be looking for this and grab the SFP of the high, and then you could look for grabbing the SFP of this down here. That's still a 9-to-1 risk reward ratio there for that trade. Now, with me personally, I am looking to short this SFP. If we do confirm it, I'm looking to short it, and I'm looking to at least come down to take out the 80.5K lows. Now, the 80.5K lows will be a TP1 for me. My TP2 is going to be between 78.3 and 77.3, and that is a great risk to reward ratio, depending on how far above that wick goes. So that is what a swing failure pattern is, and that is how you trade it. You wait for the pierce above, and then once you start to fall back below, you enter short once you start to fall back below, putting your stop above the wick high. I hope that helps, you guys. I hope that helps. Anu Sad, thank you for asking that question. Made good money from Solana, dumped from 140 to 125. Yeah, guys, by the way, in yesterday's video on Solana, we took the short from right up here. Remember, during last Wednesday's live stream. And I did tell you yesterday in the video that I'm taking some more profit down here at the macro value area low, because this is the value area low of an almost 2-year long range. And I did say that it's likely that we're going to range in between the point of control, the value area low, point of control, value area low, point of control. It's also within our pitchfork band, which we often on these higher time frame pitchforks form ranges in and around these pitchfork bands. So for me, the highest probability on Solana was to range within here for a bit. And that's exactly what we're seeing. Also, I said the same thing on Ethereum. I told you guys, and I still am long on Ethereum from down here, because I told you guys on Ethereum, if we dump and we see a higher time frame backtest of that pitchfork midline, I will be looking to long it. And the reason why is because we had front run our key resistance on this ascending channel. Remember, we were in this ascending channel here, and we had broke down before hitting our 786 up here. And so that is why I was looking for a long up here, down here, excuse me. Okay, let me, I still want to go through the total market cap, guys. I still want to go through a couple things here. It was lower, but I was sleeping and forgot to take profit. Okay, good morning. Chicken Salt, welcome in, man. Thank you so much. Yeah, just thank you for being here. You know, the bulls are back. Well, yes, internally, intraday, the bulls are back. The higher time frame bias, guys, the trend is still bearish. Higher time frame bias is still lower lows and lower highs on the chart. So please don't get too hyped up. Don't let your emotions get too much in control of this little intraday pump that we're seeing. Yes, it does look good right now. Yes, this could have been a fake out of our big Fibonacci channel, and we could be about to pump all the way up to 108 to 110K. But until we invalidate our bearish scenario, the higher probability is still to see a bearish scenario here. Okay, so, and this is why as traders, we look for levels both to the downside at support levels and resistance levels, and we try to long and short both of them. That way we're hedged no matter what happens. This was an amazing explanation. Thanks. Of course, Anu said, of course, I do hope that helped. So I expect the pump to fail. I'm expecting a rejection from 93.2 to about 94K, with the max rejection being at 95K. Because remember, we're looking at a bigger, let me zoom out onto the 12-hour time frame. We're still looking at our impulse from the downside being incomplete here. And this is higher time frame likely to be an impulse to the downside. First of all, because if we pull our trend-based Fibonacci extinction from the highs of 1 to the lows of 1 to the highs of 2, we did surpass our 1.18 Fibonacci extinction. So anytime you pass that level, like that's kind of like the max level you drop to in an extended flat correction. You can have a very volatile extended flat correction, a 3-wave correction, but generally that is your maximum target. And if you pass the 1.618, it makes it far more likely that this is impulse to the downside rather than a corrective move, even an expanded flat correction, which sometimes expanded flats do come to the 1.618. Now, another reason why is because of our volume increase on the dump to the downside, like I showed you guys earlier in the stream. If we turn on that volume, and as we were dumping to the downside, volume's increasing on the dump to the downside, making it more likely to be impulsive. If you're dumping to the downside and volume is decreasing, that makes it more likely to be corrective, and you do get that push up. So that is another reason why I think it could be impulse, an unfinished impulse to the downside. But within this impulse to the downside, we have our wave 1, our wave 2, internal wave 1, internal wave 2. We're in our big wave 3. Within your 4th wave, you're looking for a 3-wave corrective move, right? Now, that 3-wave corrective move could be an ABC correction, and in an ABC, within your A wave, you're going to see a mini 5-wave impulse. 1, 2, 3, 4, 5. You're going to see a 3-wave corrective move in B, and then you're going to see a 1, 2, 3, 4, 5 within your C wave. It's called the 5-3-5. You'll often hear that in Elliott Traders. We had a 5-3-5 ABC correction. Impulse, corrective, impulse within the larger correction. Now, within a more complex correction, a WXY correction, you're looking at a 3-wave corrective move, followed by a 3-wave corrective move, followed by another 3-wave corrective move. But remember, this is where it gets really complicated within the fractals. If we're looking at this WXY corrective move, within your W, you're going to see an ABC. That 3-wave corrective move is most likely to be an ABC corrective move. But still, within your A wave, you're looking for a little mini 5-wave impulse, right? A 1, 2, 3, 4, 5. And then within your C wave, you're looking for a 5-wave impulse, even within an A, B, C correction, within a larger W. So this is where it gets into fractals upon fractals upon fractals. But we do have valid counts right now for a WXY correction in here. And our C wave that we're seeing today, our Y wave that we're seeing today, within the last leg of the Y wave, we could be in it right now. We are seeing potentially coming up and taking out the highs. Now, it's more likely to take out the highs because this move down yesterday was a 3-wave corrective move. Because that was a 3-wave corrective move, it's more likely, more probable to take out our highs from last Friday. Now, that still doesn't mean that this is going to be a larger 4th-wave corrective move before seeing our 1, 2, 3, 4, 5-wave impulse. And that, by the way, guys, would only be our first 5, because remember, we have 1, 2, 1, 2. So now we need 2, 4, 5s. This would be our first 4. This would be our first 5. We would need another 4 and then another 5. And that is why I still think it's possible to come down to 74.5K to take out those lows, or to 70K even. And remember, on our larger weekly time frame analysis, let me zoom out to the, I'm just going to zoom out to the 3-day chart, but this is high time frame analysis. We did finish our impulse of the bull market from our 15K lows up to our 108K all-time high. This was a nice, clean, very, very clean 5-wave impulse. Now, we can say this 5-wave impulse ended here because we broke weekly market structure bearishly with this distribution. By the way, go look at my channel in December. I made a video while this range was forming telling you guys this was likely to be a distribution range and it was likely to break to the downside. I let you guys know ahead of time. We saw the same exact distribution scenario up here, and I told you guys that a couple weeks ago ahead of time. But within this larger structure, anytime an impulse finishes, you're looking for a corrective move. Now, in a sharp ABC correction, your ABC, you'll drop in your ABC to the golden pocket. That right now for this is 33K. That is out of the question for me right now. Yes, in a very bad bear market, we could drop to 33K. But I said this all the way back in May when we started bouncing here. I said, guys, we could be looking at a bigger flat correction in here. And if we are going to continue some sort of super cycle or break the 4-year cycle theory, then what we could see here, and you guys go look at some of my videos back in May, I was talking about this scenario all the way back in May where we could see a bigger flat correction in here. And in your C wave, you want to come down to take out your A wave lows. So far, this is playing out because if we look at our trend-based Fibonacci extinctions, let me see if I still have this on the chart. Yeah, we did reject between the 1.236 and the 1.382 Fibonacci extinction, which is our flat. If you pull a Fibonacci expansion from the lows of your A wave to the highs of highs of A wave to lows of A wave, you're looking at that being a flat correction. Your B wave can actually pierce the highs of A and come all the way up to the 1.382. And then your C wave is a nice impulse, a nice 5-wave impulse to the downside. And right now we're seeing a double 1-2 impulse. Remember, 1, 2, 1, 2, or 3, 4, 5, 4, 5. We could see this C wave. Right now, this does look most probable on higher time frames. Why does it look most probable? Because on the weekly time frame, triple drive of bearish divergence, money flow bearish divergence on the weekly time frames. Triple drive of bearish divergence, money flow draining out as our entire 2025 range is forming here. Money flow draining out. Once again, it looks like a distribution range. I hate to say it, guys. But also monthly time frame bear divs. So we are seeing confirmations to at least come down to take out your 74.5K lows. That is what I have to say. Now, I forgot where I was going with this. I will say this. We also did, oops, I didn't mean to delete that. I wanted to hide that. We did reject from our pitchfork midline as well. You can see our key pitchfork midline in here. Let me just hide this. In our all-time high, we rejected from this pitchfork midline of a pitchfork that's a multi-cycle pitchfork pulled from the COVID lows to our 65K highs, which was actually the bull market highs as far as volume and money flow went, down to our bear market lows. And look at how nice. Let me just hide this real quick. And let me throw this back up here and then hide that. Look at how nice our 5-wave or our entire bull market has respected this pitchfork. High time frame, rejected the bottom of the band, made a higher low, rejected the top of the band, made a flat correction in here, and then we pushed up above the band, broke above it, bullishly backtested it. Once we confirmed support on the bullish backtest, we pushed up to the midline, chopped around, formed a small range, and rejected from the midline. We dropped all the way to your lower band, bounced from the lower band, came up, tried to break above the midline, but we got that distribution range above the midline, and then we broke it down. But you can see here, when we broke it down, we actually bearishly backtested it. We broke it down. We started closing daily candles below it. We backtested it, and then once we backtested it, we dropped. After bouncing from our 74K lows, very, very key bull market lows, a bull market trend low at 74K, you can see very nice support, exactly hitting our lower band here. We then came up to backtest the midline. And guys, we see this a lot. 3 tests of it. 1, 2, 3 tests. And this was kind of a failed auction here. So pretty much 3 tests of it. Upon the 3rd test, you reject on a new all-time high, and now we're dumping over 30%, over 20%. So that is high time frame scenario analysis. And guys, this is very, very complex stuff that we're looking at, high time frame complex stuff, but it is seeming to play out very, very technically. Like, Bitcoin trades so freaking technically that it is quite amazing to trade, to be honest with you guys. Okay, let me check the chat here. Yeah, watch closely, 94K and SFP area and Solana too. Yeah, we're gonna look at that. Steel and Stone, thank you so much for that comment, and thank you for being here. Welcome in, man. Without that V-shaped recovery, it looks corrective. Yes, it does. Wait, are you talking about locally, more locally? Looks like an inverse Adam and Eve pattern. Yes, it could be. I see what you mean there. Let's zoom in onto the 1-hour chart. Yeah, I see kind of what you mean, that Adam and Eve pattern, like the V here, or I'm not sure exactly where you're looking at that, or if you're looking at it as a higher time frame thing, but I kind of get what you mean. Okay, guys, so let's go into the total market cap really quickly. This is very, very important, what we're seeing at the total market cap. So once again, on the total market cap, guys, we rejected the top at the very beginning of 2025. We rejected the top of the pitchfork. I was taking profit on altcoins and Bitcoin here, and I got so much crap for it. We fell down to our lower band. We saw a couple wicks past our lower band, but really our weekly candle body closed at the bottom of our lower band. We pushed then up to the upper band, and we formed a range, 3 taps into the upper band. Once again, guys, remember, 3 taps is really important. Oftentimes on major rejections, you'll see 3 taps. Tap 1, tap 2, tap 3. This, in this case, was a Model 1 distribution, right? You have your first big high. Your second high is always higher than your first high. And in the Model 1 distribution, your third high is above your second high. So Model 1 distribution created bear divs. Look at bear divs confirmed. Money flow draining out as the range was forming. More likely to be distribution in here. And we started distributing down. We fell all the way to the bottom of our pitchfork. On the low that we made Friday, November 21st, we wicked past the bottom of the pitchfork, but we closed the daily candle above it. Well, then what I said last week was it is likely, guys, that we could form a range between the bottom of the pitchfork and your lower band. Form a range in here because also our 1, 2, 1, 2, our big third wave here, our fourth wave corrective target between the 382 and the 0.5 Fibonacci, we front ran that 0.5 Fibonacci. So we could be seeing a higher low coming on the charts before coming up to the 5th wave and seeing that 3-wave corrective move before breaking the sucker down in a 5th wave. Now, the invalidation, once again, for this impulse to the downside is hitting this golden pocket. And this golden pocket at 3.26 trillion is going to be important, but we could even wick a little bit past our 0.5 Fibonacci here, hitting up into the band, the lower band of the pitchfork, reject, and guys, we often will form ranges at and around the bottom of these bands, between the bottom band of the pitchfork and the the bottom of the pitchfork and your lower band. Another thing we could be looking for, once again, is that kind of 3 taps before ultimately rejecting, right? 3 taps. So we have a tap 1 here. This is a higher low. So that makes it more likely to create a higher high here, hitting into this lower band. But then if we come down here again, see another tap, push up to your local golden pocket. Because remember, if we're looking at this as a 3-wave corrective move, then that would mean this is all a wave 1 to the downside. Your wave 2 often retraces to the golden pockets, and then you see your big third wave, which finally breaks it down. But you get your 3 taps, your wave 1, your 3 taps here, and then you break it down in a third wave, and you break down with volume underneath the pitchfork, and then you see a 4, a 5, and you continue the breakdown. So we might be seeing something like that coming in the next month or so. This will take some time to play out because this is on the daily time frame. But yeah, guys, total market cap is at our key support level of the pitchfork, the bullish pitchfork. Now, Bitcoin has already lost this pitchfork. This was pulled in our larger impulsive move. Remember, on the weekly time frame, we're looking at the impulse of this bull market here. And we were looking at a wave 1, wave 2, wave 3, wave 4, and a wave 5. Now, why did we end it here and not here? Well, because we did break your prior highs of wave 3 in the wave 4. We came down, we broke market structure bearishly. We came down a little bit too low here. So now we can say this impulse is done, and this is now going to be a flat correction in here, coming to take out these lows before continuing up here. And, or at least, continuing up to make new highs. And then after that, we'll have to see what happens. But we are at the bottom support here of this pitchfork. And still the last hope for the bull market is that this is going to hold and we are going to get one more new high here. And then in that case, we would have to look at this as a potential. We'd have to change this bullish count here. We could even look at this as like a multiple 1-2 count, a wave 1, wave 2, wave 1, wave 2. This is all your third wave. Then you get your 4, 5, 4, 5. And then we could be looking at now a flat correction here. Boom, taking out the highs and then breaking down. After breaking down, you could see the big bear market play out here. Now that is way high time frame speculation that would take us months to even see if it's valid or not. So for right now, we just trade the levels, and right now we're at the support on our total market cap, bouncing from the support level. If we zoom in here onto the hourly chart, look at where we bounced yesterday, excuse me. Look at where we bounced, like exactly at the bottom of the pitchfork. And it's likely that we're going to form some sort of range in here. Just like if you guys go watch my video yesterday, I talked about on Ethereum is likely to form a range around this pitchfork. So if we zoom into the daily time frame, pitchfork midline, and this is very important for Ethereum. Guys, we had our distribution range at the top of the pitchfork. Now, first of all, this pitchfork on Ethereum has been highly, highly respected from the $1,400 lows. So let me hide some of these volume profiles so we can get a cleaner chart here. And what I will show you here is we hit into our macro value area low here of our 4-year long range. So let me turn on our macro 4-year long range. And you can see we hit right into the value area low here. We rejected from the value area high. We had a failed auction breakout of the value area high. We broke back in, back tested, confirmed bearishly, worked our way all the way down for a few months. That was a very aggressive dump on Ethereum for a few months. But once we bounce from the value area low, now we have a bullish structure to look at overall. Bear market lows, cycle highs for the cycle so far, followed by the cycle lows for that cycle. Not cycle lows, but the bull markets, that drop, that 5-month drop we saw from December through April. And bounce from the value area low. But look at this pitchfork, how well it's been respected. Once we got back up into the band, once again, I always talk about this, guys. You will form ranges within these pitchfork bands. So this was a 2-week long range that we formed inside the pitchfork band. We held it as support, so we pushed up above to the next major pitchfork level. Well, we broke straight above it, and we formed a range above it. But after seeing a liquidity grab, someone asked me about a swing failure pattern. You can see here, boom, we saw a swing failure pattern of the range high, and then we dumped, and we took out the liquidity from the range low. We also bounced from a very key anchored VWAP telling us our momentum was going to continue bullishly to make new highs. But what I want to highlight here is this pitchfork. The midline was respected well. We formed a range in and around the pitchfork midline. Then we broke up to the next major pitchfork level. Once again, just like here, we broke through the pitchfork level and back tested as support multiple times. Well, here we came up, we broke through the pitchfork level. Let me get rid of this and let me hide our 4-year long range now so this is cleaner. We broke through our pitchfork level, back tested it, and once we back tested it, that was also the value area high of our 4-year long range. Bounced from value area low, reclaimed POC. We broke above the value area high, back tested the value area high and the pitchfork band. By the way, I longed here and I told all you guys I was longing here and I was looking for a TP at the top of the pitchfork. So we came up after bouncing from your upper band, you came up to the top of the pitchfork and then you got that range, distribution range. Now, why is this 4 taps is important here, but this first tap, we had front run our all-time high. If we look at our all-time high here, we had front run the all-time high. We did not come up and grab the liquidity from the all-time high on that first tap. You can see here, did not take it. So what did we do then? We saw a small corrective move, making a higher low. Then we came up and grabbed the liquidity from the all-time high, seeing a swing failure pattern on the daily. And then you get your little distribution range continuing, rejecting multiple times from the top of the pitchfork. And then once we rejected the top of the pitchfork, I did say that this was more likely to be distribution because once again, bearish divergence is forming, money flow draining out of the asset as the range was forming, making it more likely to be distribution. And then sure enough, guys, we dropped down to, in that October 10th dump, at least on Coinbase, we dropped to touch the bottom band of our pitchfork as support. But you can see the daily candle body closed at the top of the pitchfork band. And we ranged in here for a few weeks here, holding the top of the pitchfork band as support. Yes, we saw wickage down below it, but every day our daily candle closed at or above our pitchfork band. Then once we finally lost it, we broke straight through both levels of the pitchfork band. And this was what was very, very important, guys. Because once we broke through the pitchfork band, it was also the value area high of our 4-year long range. So let me turn on that 4-year long range. You can see the value area high was right here as well at the bottom of the pitchfork band, right? So we broke through the value area high of the range and our pitchfork band, finding re-acceptance back within our 4-year long range. So now after bouncing from a local support, remember this was a golden pocket, a very, very key golden pocket at $3,200, $2,900 to $3,200. We bounced up and we bearishly back tested the value area high of the range and your pitchfork band. Now, once again, guys, if you reject here, you expect to make new lows below this low. We did reject there. And look at it, took a couple days. And this is what we could be seeing on Bitcoin right now on the higher time frames, a multiple day range and rejection before making new lows. And so we did reject the pitchfork band. We did reject the value area high, and we dumped to the next major pitchfork level. Well, on Ethereum, we dumped to this level. I told you guys this was also our 786 Fibonacci down here, and it was the value area high of this range. If we turn on that range, you can see it was also the value area high of that range. So previous range, value area high, 786 Fibonacci, pitchfork midline. I was looking for longs here way ahead of time. We came down there, we got that opportunity. But because we're still in a bearish overall structure, we're looking for possible 3-wave corrective move, and I was looking to come up to the 786 up here, a local resistance around 3,100, 31 to 3,200. And now we're making a higher low. We bounced once again yesterday perfectly from the back test of your pitchfork midline again, and now maybe we're going to come up to 3,100 where I do have a TP level of 75% of my long position on Ethereum. And once we see a 3-wave corrective move here, we might now come down again, a third tap, maybe a lower high, and start that impulse. But remember, this is going to be the impulse to the downside after seeing the 3-wave corrective move. So if and that 2250 is a major level. 2250 is our macro logarithmic golden pocket. You know, that level to me is super, super important. Our macro logarithmic golden pocket. Let's see here. Right there, around 2250 to 2160. And that is pulled from the $1,400 lows to our new all-time highs. You have to put that on log scale. But yes, so Ethereum is seeing a nice bounce locally on Ethereum. I do think we could continue a little bit higher here. I do think we're going to continue up at least to take out the liquidity from last week's highs into your 786 up here. And then also, I believe it was our range value area high. No, let's see. It was this small sideways range here. And I think it's shifted. There was another level there that we had there. So it wasn't just your 786 there. There was more confluence. And let's see, was there any weekly levels? No. Daily levels. Yeah, it was a daily level as well. And maybe a naked daily point of control. Yes, a naked daily point of control and a daily level along with your 786 Fibonacci. And that 786 Fibonacci was just pulled from the highs of this little mini range in here down to your lows. And if we turn on that 786 Fibonacci, you can see that 786 Fibonacci right at that daily level, right at that naked daily point of control. And that's why we have this box here of resistance. So I am looking to come up to like 31.21 up to about 31.45, seeing that kind of three-wave corrective move in here before potentially dumping and losing it. Okay. I think that's why I only trade BTC for that reason. Yeah, I mean, Bitcoin's the best one to trade. I do trade some of the altcoins as well because there is increased opportunity. But Bitcoin is the good one, you know? It's really awesome, technical. I think Ethereum is not as technical. Solana is actually very technical, and that's why I like trading Solana as well. Let's go ahead and go into SUI real quick because someone asked about SUI. Now, yesterday, during my video yesterday, guys, we were right down in here, and I said this is the long area. We SFP'd the lows into your value area low of your little mini sideways range that could be forming. Because once again, guys, we're at the bottom of a pitchfork here and our sideways range. Now, we busted straight through our local support level. If we were looking for a 5-wave move down, a 1, 2, 3, 4, 5, obviously that didn't play out. That was invalidated and we busted straight through that. So that would have been, well, first of all, we would have looked for confirmations. We wouldn't have just limited short there, because it's near a much bigger dump to the downside. But if you were looking at this continuing to be an impulse to the downside, we would have looked for a short here on your wave 4. That was invalidated. That was an incorrect trade. But on the higher time frames for SUI, and I covered this last Friday with you guys in the live stream, I said the two major levels that I'm looking at on SUI are the 1-to-1 Fibonacci extinction correction and the bottom of the pitchfork. And then the next major level is your 0.65 golden pocket, your 1.236 Fibonacci extinction, and your daily order block that's in here. So here's the thing on SUI. Clearly, this is an impulse to the upside. Wave 1, wave 2, wave 3, wave 4, wave 5 in here. 5-wave impulse to the upside. Very clear impulsive structure here. Now, after that impulse ends, you're going to look for a corrective move. Oftentimes, your corrective move is longer than your impulse. If we take our trend-based time, trend-based fib time, and we go from the bottom of the impulse to the top of the impulse, if I can get it, we are now passing the 2-to-1 time. So this corrective move has lasted over 2 times as long as this impulse. You don't want it to go over the 3-to-1 time, and that is probably going to be around May. You know, we still have plenty of time there, but we are passing the 2-to-1 for the correction. But here's the thing. After this impulse, we're looking for a bigger correction, and this does look like kind of a flat corrective move in here, a running flat because we did not take out these highs. You see that we made a lower high here right up into that resistance. By the way, I called this resistance here. As we were coming up there, I shorted that exact level. I took profit on a long, and I shorted that exact touch of the box. That was our value area high at the time into a naked weekly point of control at 441. Go look at June 20th through the 27th. Go watch the videos from June 20th through the 27th. That was the exact level I was looking. And we did get the rejection there. It was also an SFP of this high in here. But from that, we can create our pitchfork, right? Our bearish pitchfork to look for our big C wave down. Or if this is a WXY, we're looking for this last corrective move down here. And you can pull your pitchfork, your bearish pitchfork, from the 3 major pivots. Of course, because this is a sideways correction in here, you're going to use a skiff pitchfork. We can go more into that at a different time when we get more into pitchfork trading. But we were looking at the bottom of the pitchfork in your 1-to-1. So if you take a trend-based Fibonacci extinction from the highs of the corrective move to your initial lows to your lower high, or, sometimes it's a higher high if it's a flat, but you're looking for this extinction. So now when we came down to the 1-to-1, that means that this dump here was the same exact length as this dump here at the 1-to-1. And your most common targets for a corrective move, a 3-wave corrective move, is between the 1-to-1 Fibonacci extinction and your 1.236 Fibonacci extinction. Now, the 1-to-1 was at the bottom of the pitchfork. Pitchforks are major levels of support. And yes, sometimes you wick past them a little bit, just like we did with Ethereum at the top of the pitchfork. You wick past it a little bit and you form a range at the top, or you could form a range at the bottom before ultimately breaking it up. So, we could do something like this, form a range here, then break it up, right? Well, look at where Sui's at now. Sui is at the bottom of the pitchfork. We could form a range in here, seeing a little bit of wickage past the bottom of it, and ultimately break it up here. That is our bullish scenario. And why are we looking for it? Because it's bouncing from our corrective move. And after the range forms, you expect to impulse up out of here. 1, 2, 3, 4, 5, a big impulse up out of here, right? Now, the big thing, though, is oftentimes on these corrective moves, in a flat correction, you generally don't come to your golden pocket. That's more of a sharper corrective move. But because we did make a lower high here, we can say that this could be a sharp corrective move before pushing back up. So in a sharp corrective move, if you come down, the most common target is the golden pocket, which you can see our logarithmic golden pocket. Because this is more than 100% pump to the upside, you need to use a logarithmic golden pocket. So if we pull that golden pocket from those lows to these highs, and we turn on our golden pocket, but we come in and we turn it settings based off log scale, because we are on the logarithmic chart, you can see that golden pocket is where I have it marked out, right? Between 117.98 and 108.99. I think I have it a little bit off up here, but yeah, that's your golden pocket. So this golden pocket right here, and look at where our 0.65 golden pocket is at the 1.236 Fibonacci extinction. We also have a very nice daily order block in there. And the reason why I'm looking, if we lose this level here, this general support of the base of the pitchfork, in here, there is nothing, no support. Look at this. Quick move up means quick move down. That's a big fair value gap in there. On the weekly time frame, that's a weekly fair value gap. And if you start to enter that fair value gap, you're likely to fill it into your golden pocket all the way through. So we either bounce from the bottom of the pitchfork, kind of where we're at now, or we drop to 108. 109, I mean. Now, yesterday, we did come down and we SFP'd our little range lows. You can see right now at the bottom of the pitchfork, like I said, on Ethereum at the top of the pitchfork, you often form ranges. So I was expecting some sort of range here to form at the bottom of the pitchfork. Well, we can look for this range to form for a bit before either breaking it up or breaking it down here. And so with this range that is forming, yesterday we came down and we SFP'd the lows. Anu Sad asked me about a swing failure pattern. This is a perfect example of a swing failure pattern. We dropped down in a 3-wave corrective move. We took out our lows. You grab the liquidity because you see you pierce that level, but your candle body closed above that level. And then you could look for the long. Now, because we took out the lows of this, that means this is a flat correction. An A, B, C. Now, because we took out the lows of your initial, you're now looking to take out the highs of this. And what did we just do, guys? We pushed up and we just took out the highs. Now, that doesn't mean it has to end here. Yes, we could see the swing failure pattern of this high and we could start to dump again, right? We could start to dump again. But we do have some resistance just above us of a daily level in confluence with your pitchfork band. And remember, guys, we often form ranges between pitchfork levels, right? So if we're at the bottom of the pitchfork and our upper band is up here, we might just form a little bit of a range here between the bottom of the pitchfork and the top of the pitchfork, kind of this ascending channel on a daily time frame, and come up to our pitchfork levels. But both of our pitchfork levels of the band have some confluence there. At the bottom of the pitchfork band, we have a daily level. At the top of the pitchfork band, we have a naked weekly point of control. So right now, and also look at all this liquidity trail that was left here. If we don't reject from this area here, it is highly likely that we come up here because we're going to just sweep all this. There is stop losses above all these lower highs here. So if we start to break up too much higher, we're going to sweep all this in one big short squeeze up to the naked weekly point of control. Right now, it does look pretty healthy right now. This, to me, on the 1 hour time frame, is not looking like a decent SFP because what happened on this first candle, we SFP'd it, we dropped down below, but then we came up again, broke the high again, we formed a little higher low, and we're coming up again right now. So I would say this is a failed swing failure pattern. At least right now, I would not try to short this here because of the failed swing failure pattern. Do we see bear divs? No, we do not see bear divs. Now, NAMI is potentially going to form some bear divs if we make another new high. If we come up here, you could see bear divs here on NAMI. Let's zoom into the 15-minute chart. 15-minute chart, money flow still looks pretty good on Market Cipher B. No bear divs on Market Cipher B. Now, NAMI is quicker, guys. I have to say, NAMI is quicker for confirming things. You can see we do have confirmed bear divs now. Higher highs in the price action. Well, really coming from like right in the middle here. Higher highs here in the price action. Lower highs in the momentum waves. And your money flow is now draining out. As we were pumping here, money flow's draining out. But we did print a hidden bull div inside of this range, meaning it's more likely to continue pushing up to at least make another high within the range. So I do, and this is where NAMI is super helpful, guys. If you guys are interested in NAMI, I'm telling you, NAMI is a great, great tool. Because if you get a low time frame, like a 15-minute hidden bear div here, or excuse me, hidden bull div, 2 hidden bull divs within this little range, hidden bull divs are continuation patterns, and the trend for the day has been bullish. So that means it's more likely that we're going to come take out these highs within our trend because we printed two hidden bull divs within this trend. And here's the thing, it would also make for a nice continued bearish divergence here. If we do see continued bear divs here and money flow continues to drain out as we're coming up to our resistance. So personally, if I was long yesterday, and gosh, guys, during the video yesterday, I was so close to stopping the video and entering in this area. Like we were like right in here yesterday. I was so close to entering. Actually, we were right in here, right around in here. And I just figured, you know, enter here, stop below the low, at least targeting your value area high of your local range. This is your local sideways range here. So, and golden pocket. I was looking at golden pocket, value area high. But if you're long on SUI, I would just be aware that your daily level at 166 to about 167.8, let's just say 166 to 168 is going to be some pretty key resistance that you could reject from. Now, if you do come up here and reject from this area, you also got to watch for the bullish back test of your value area high before coming up higher here. Yeah, so we'll see how that plays out in time. Okay. When daily candle closes, isn't it a bullish divergence on the daily? Okay, let's check. I assume you mean SUI because that's what you asked about. Oops, that's 2-day. I don't know what indicator you're using. It depends on what indicator you're using. So on the bullish divergences, you want to be making lower lows in the price action and higher lows in the momentum waves. Yeah, I mean, you could classify this as a bull div. This is a lower low here, right? This is going to be a higher low here because this little momentum wave here is bottoming out and we see a green dot. Now on NAMI, it's not a bull div because you can see, even though it's a lower low here, It's an equal low on the actually, let's pull this up full screen and we'll see here. Actually, it is a bull div. Higher low here, just barely, and money flow's been curving up here. So yeah, you do have a daily bullish divergence here on NAMI that is actually already confirmed with yesterday's low. So the daily bull div might be able to bring us back up to backtest our naked weekly point of control up here at 178, the top of the pitchfork band. Another thing I would say is these this looks like a bunch of 1-2s in here, right? You have your 1-2s, 1-2s, 1-2s. You have your big third wave down here. So now we're looking for some 4-5s, 4-5s, 4-5s. And you could see something like this. You see all your sideways grindy 1-2s in here. You get your big flush down, and now you want to see your 4-5s coming in here. And yes, it is still likely. Let's pull our Fibonacci targets for our wave 4. So pulling from the highs of your wave 3 to the lows of your wave 3. And let me make sure that is less than 30%. Let's see, is that over 30%? That's a 65% drop. So we're going to put our wave 4 targets on there, which is between the 382 and the 0.5. But because this is over a 30% drop, you need to change this to based off log scale to get the proper retracement levels. And look at where those are at. Actually, very, very interesting. That 0.5 Fibonacci is very interesting. So guys, within our wave 4s, your wave 1s and 2s are all in here. And remember, we're looking for impulse, corrective move, impulse, right? In a bigger ABC. Impulse, corrective move, impulse. So on this impulse to the downside, which looks like a multiple 1-2, 1-2, 1-2, 1-2. So a triple 1-2 impulse. You have your big third wave. So now we're going to look for 3-4-5s. Now, you could be seeing a fourth wave come all the way up to the 382 or even all the way up to the 0.5 Fibonacci. This daily bullish divergence could bring us up to the 0.5 Fibonacci. What is very interesting about that at $2.20, it's also the value area low of this entire sideways range. And guys, since we've broken down below the value area low, you can see here we broke down below it. We had an immediate back test. After bouncing from the top of the band, we had an immediate back test. We rejected, so you expect new lows. Well, now we need, sometimes after seeing an immediate back test, you'll get a higher time frame back test. And then actually you'll get a higher time frame back test, then you expect new lows because you're going to now start your 4-5s. And your 4-5s tend to be more wedgy. Your 1-2s tend to be in a channel. Your 4-5s can be a little bit wedgy here. But that's what we could be looking at, guys, is coming all the way up to 220. Now, I will say this, 220 is significant resistance now. Because by the time we get up there, first of all, we're probably going to like reject from here, chop around within this pitchfork for a bit, this pitchfork band. If we break it up here, look at your value area low is going to be right around your pitchfork midline and your 0.5 Fibonacci. So that would mean 220 is significant resistance now. Of course, we do have some resistances before then, but with the daily bull divs confirmed at the bottom of a major support level, the bottom of the pitchfork, yes, you could push up right away. I think it's a little bit more likely that we're going to form a range down here first, and I'm not so sure we're going to push all the way up to that 0.5 Fibonacci, but we can look at it. You know, we can look at what's going to develop. Let's now, whoever asked me about this, let's check this out for the next month or so, and let's see if this analysis plays out. We can remember this day, December 2nd, and we can come back and look at to see if our analysis was right here. You know what? We'll just do this. We'll put the bigger primary count on here, and we'll bring it all the way up here, 4 and a 5, and then we can come look at this to see if this played out. But within your 1-2s, you have triple 1-2, so we're going to be expecting triple 4-5s also in here. And then remember, this is only part of your bigger ABC correction. Oh, we are, yeah, an A wave here. Oops, a B wave here, a C wave here. So we'll hide these, and we'll just keep an eye on this scenario over the next couple of months. But that is kind of what we're looking at for SUI. So for now, I would say just be aware of the range that could form between the pitchfork band. And you can see the pitchfork band. I know I have a lot of stuff on the chart here, but it's pretty much the lower purple box and the upper purple box are the top and bottom of your pitchfork band. And then, of course, this is the bottom of the pitchfork. So expecting some sort of range in here for a bit might be probable. Okay. Yes. Okay. I will buy SUI spot $1 to $1.20. Yeah. Okay. I mean, you know, at 118, 117.8 is the goal, the 618 of the golden pocket. Now, if we get down to 109, for me, that is a pretty big buy level for me. Awesome, man. Well, thank you. And by the way, I don't know how to read that name, but thank you so much for watching from Korea. I'm super grateful that you're up so early watching in the morning, and I'm glad this is helpful for you. Guys, if any of this has been helpful for you today, like if you learned anything from the stream or got any sort of insight into the market, please hit the like button for me. Share the video with anyone that you think might find it interesting. Just trying to grow the channel and everything, so I appreciate y'all. And let's see here. So let's check Bitcoin out real quick. Let's see what Bitcoin's up to. All right, guys. I think Bitcoin is in a little fourth wave right now. Is likely to reject. By the way, yesterday was the start of a new month. We had a naked monthly point of control. We just wicked up past our naked monthly point of control, and now we're starting to lose it here. Let's see if we have low time frame bear divs here, because we do have low time frame bear divs. Okay, here's the thing, guys. We might expect a small pullback here. Bearish divergences, money flow draining out on NAMI, which is quicker. So here's what we can expect now. Now that we're losing our naked monthly point of control here, I'm looking at this as a potential 1, 2, 3, 4, and then one more push to break the highs, break 93.2. So because of that, we can pull our Fibonacci here. Let me zoom out to the 30-minute chart. We're going to pull our Fibonacci from the lows of wave 3, because remember, this is a flat correction in here. Lows of wave 3 to the highs of wave 3. And we're going to look at our regular 382 to 0.5. So yeah, coming down to that 0.5 right around the VWAP, because by the time we come down there, the VWAP is going to be pretty much in confluence with that. That would be a nice back test. And also, if we look at this sideways range that we have in here. Okay, if we look at this sideways range, we're still we're starting to lose the point of control of the range, but let's look at it just from the bottom. Yeah, look at where that value area high back test is. And remember, we're looking at the range, this forming a corrective sideways range. So that's why we're pulling the volume of this from the end of the impulse down. This was clearly an impulse down here. From 107 to 80.5 was clearly an impulse to the downside. So after the impulse finishes, you're expecting a corrective move. You want to pull the volume of that corrective move. So if we go from the end of the impulse at the lows here, let me make sure it's right on there, to what our price action afterwards, and look at where your fourth wave corrective target is. It's the bullish backtest of the value area high and your VWAP. So now what we could even look at here on Bitcoin, a wave 1, a wave 2, a wave 3, if we come down and backtest about 89.3 to about 89.1, that could be your 4, and you're going to be looking. So we could even scalp this, guys. As scalp traders, we could even look at a small scalp here, because remember, it doesn't matter how small the movement is of your trade. It matters about the risk reward. And so we could be looking at longing your stop. I would probably wait for the bounce, and then I would put my stop below wherever that wick bounced from. And then I would be targeting taking out the highs, these highs here. That's a 10 to 1 risk reward ratio. So you're risking 1% to make 10%. That's on a small ass little move that could take a day or two. You can make 10% on your portfolio. So that is a trade we could look at during the stream. And maybe we'll get that. And I'll try to let you guys know. Let's actually set an alert here. Okay, as a scalp long opportunity. But remember, guys, the overall bias for me is still to come down to make new lows, to come down to break our 80.5K lows, come down into that 78 to 77K region. But for now, we're in a fourth wave corrective move, which means this fourth wave corrective move could last a few more days here of, or, you know, a bit longer, because we have our 1, 2, 1, 2, our big third wave. And within your fourth wave, because this was a higher low yesterday, we're now expecting a higher high before breaking this down in an impulse. And this would be your first 4. This would be your first 5. And then we would expect one more 4, 5. And that second 4, 5, you really want it to take out the 70.5K lows. So Tiki, wait, who was that just asked about that? Yeah, please like the stream. And Samuel S., welcome in, man. Thank you so much for being here. Thank you for modding. Appreciate you, man. Back to BTC, our dumping. Yeah, we're dumping a little bit. And guys, I personally am not shorting this yet, but we are at our resistance box. I gave you guys this resistance box ahead of time. Actually, you know, before the weekend even hit. I think last Monday I gave that to you guys. You know, here's the thing. If you wanted to short right now, you kind of missed out here. You could have shorted on the SFP or as soon as you lost these highs. You see these internal highs in here. It was pretty much an SFP of those internal highs. So if you shorted that, as soon as you lost that, you could have entered short. Your stop would go above that wick, and even targeting the back test of the value area low, that's still a 5.8 risk to reward trade right there. And then now, you know, that's such a small move in retrospect, but it's still a 5-to-1, 6-to-1 almost risk reward trade. So this is how you can use small scalps to still make money. It's not about how much the price moves. It's about your risk to reward ratio on the moves. But it does look like we are starting to dump in a potential fourth wave here. Okay. Jesus Save 77, man. Welcome in so much. And thank you so much for that super chat. I appreciate you so much, man. You're one of the most supportive members of the community. And thank you for everything, man. Thank you. Thank you. So, CJ, so you said, so no 78K. No, I am expecting 78K, CJ. I'm still expecting the overall bigger bias to be bearish, but it just looks like we're going to make new highs locally before then. So, once again, in that bigger double 1-2 impulse to the downside, the only way I won't be expecting 78K is if we hit the 97K golden pocket, because that would invalidate this push. So far, this push to the downside looks like an incomplete impulse, right? Now, if we come up and we tap that golden pocket, that's going to invalidate our third wave, because if you hit in a fourth wave corrective move, if you hit the golden pocket of the third wave, that invalidates the impulse. In that case, we would also be getting back above our Fibonacci channel. We'd be getting back into our Fibonacci channel. And yes, my bias would shift then. If we start closing daily candles back inside our Fibonacci channel, and really a weekly candle, if we close this weekly candle back inside the Fibonacci channel, guys, I'm going to classify this as a fake out and more upside to come. And let me explain real quickly here. We're going to zoom out onto the... I'm just going to hide some of this here, and we're going to zoom out onto the weekly time frame here. Let me hide our little box too. Okay, for the weekly time frame, look at, first of all, how nice this Fibonacci channel has been respected throughout the entire bull market. And we're losing and closing a candle last 2 weeks ago, closed a weekly candle below the trend of the entire bull market. And the midline was really the big thing that was holding for most of the bull market. Once you lost the midline, you did expect to drop to the bottom of the channel. And that's also where a key anchored VWAP was. But now that we're closing weekly candles below our Fibonacci channel, if we do see a couple choppy weeks in here, and then we re-enter this weekly candle and close back above that channel, we could classify this as a fake out of the bottom, and now we're about to pump again. Just like we saw in here, we closed the weekly candle below the midline, that white line, The very next week, we had a bullish engulfing candle. We closed above, and guess what? We kept pumping. So in our bullish scenario here, even though it's 2 candles later, we did, if we closed a couple candles below, but if we enter this weekly candle, enters and closes back inside of that, we could classify this as a little fake out of the bottom, and we might actually even be able to see a little move up. I'm not saying towards all-time highs, but at least up to our 108K golden pocket, 108 to 110K golden pocket. Because everyone screams 100K at that, I think it should touch 78K at least once. Yeah, CJ, I do too, man. I do too. I think we are going to continue down. This is going to take some time, guys. This is going to take some time to play out this double 1-2 impulse, even within our bigger ABC or WXY, whatever, our bigger flat correction, bigger flat correction in here. And the target is actually to take out those lows. Now, there is such a thing as a running flat correction where you do front run taking out the lows, and you do bounce from a major support level, and you start the next impulse here. So it doesn't have to come down to take out 74.5. It is likely and probable in my eyes based off the high time frame bearish divergences. But for me, I think we're at least coming down to 78. It's the highest probability. Also, guys, I mean, like, just as far as this goes, anytime you lose a major channel, you'll lose it. You'll come up for a couple back tests, and then you generally drop. I mean, this happens over and over and over. So people are getting hyper excited right now saying new all-time highs, bull market back on. I am telling you, they are trapping liquidity in this little range, and they are going to most likely dump it. That is the highest probability. Let's actually look at this on the order flow. On the 15-minute chart, yeah, we are seeing this is a little bit of a long squeeze happening right now. You can see this dump that we've seen so far, these last few candles. Open interest is starting to drop here because we saw a lot of longs coming in. Look at primarily in this last little leg, this third wave. If we're looking at this as a 1, 2, 3, 4, 5 here, within this third wave here, a lot of long positions were stepping in, and a majority of those were fresh long positions, right? Because our open interest is increasing here. Fresh long positions stepping in. So now, and especially towards the top, look at this little piece right here. All these long positions stepped in. Really, a mixture here and like here, actually. A lot of long positions were stepping in right up into your resistance area. And guys, we see it over and over and over. Retail FOMO's in at resistance. Why? Why FOMO in at resistance? Someone asked Jason during his live stream, I was watching it, and we were literally right up in here. And they were like, should we long now, Jason? Should we long now? And Jason's like, no, even if I think it's going to 97K, I can't long now because that would give me a horrible entry. At the very least, you're at resistance. Say you're going to SFP the highs as a target or even come up to 94K. But let's just say you're going to enter right here. Let's see. Do they have the long short position on this? I'll just go on to this here. So let's go to the 15-minute, just like I was on that order flow. I didn't mean to do that. All right, so say we're going to long, like right during Jason's live stream, we were right up in here, and someone was asking him, should we long now? And he's like, no, you can't long now, or at least I'm not longing now, because we have a liquidity grab just above into resistance. And even if we come up to 94K, you could reject from 94K, which is another target. So if you long now, you're longing here, your first take profit would have to be the SFP of the highs, but you have to put your stop, like your technical stop would be breaking market structure bearishly, so breaking below these lows. That is, you want your risk to reward ratio to be a 2-to-1 or a 3-to-1, not as a half-to-1. That means right now you're risking $1 to lose $2. That is horrible, So You would never take a long up here, even if you thought it was going to push higher. You would have to wait for that pullback. And like I said, if we get that wave 4 pullback to our VWAP, which is also the value area high of our little mini range, and it's also the 0.5 Fibonacci, then you could look for a long from down here on that back test. Of course, you're probably going to wait for it to bounce a little bit. You're going to put your stop below wherever that wick went, and you're targeting the SFP. That's a 6-to-1 risk-to-reward ratio there. And that means that's good to take. But on the other hand, the other one was a horrible trade to take. Even though from here to here and here to here is very similar a movement in price, it's all about your risk to reward ratio, guys. It's all about your entries and your stop loss. Okay, you're targeting 73K originally, but this pump is making me think 78K at least. Yeah, you know, I think it's likely to come down to take out the 70.5K lows. But remember, we're in that double 1-2 impulse on the daily time frame, and you are going to see, just like our move up in here took a week and a half. This one took a week and a half, or like 9 days or something like that. Your wave 4s are often longer, sometimes 2 to 3 times as long. So yeah, we could see a rise and we could dump to 80.5. We could see another rise. We could dump, and your 4-5s are generally flatter and like that they could be wedgy too. Like a lot of the times they are wedgy. But yeah, I think that this could take another month to play out, honestly, guys, because this, well, let's just measure how long that took. So if we go from our all-time high to that first dump, 36 days. So yeah, we could be from last November 21st, we could go all the way till, you know, the new year, a little bit into the new year before this impulse to the downside is done. And then come the new year, we could pump. Actually, that's very interesting because let me just go zoom out to the 3-day time frame and look at the the bottom of the bear market. You started getting those 4-5s in here, right? You got your big dump down. Oops. You got your big dump down. This 1, 2, 3, 4, and then this 5 here. But you started kind of chopping and getting that exhaustive price action towards the end. And when was this low made here? November 22nd. You ranged for about a month, and then it was like right into the new year we started to pump. Look at this. January 1st was right here. And then from January 1st, bull market, baby. So maybe we're going to continue dumping through the end of the year. We're going to be kind of at the bottom of a bigger impulse to the downside, and then we're going to start pushing. I know history doesn't repeat, but it does rhyme. Guys, give me just 1 second here. I'll be back in 20 to 30 seconds. All right. I'm sorry, guys. I am back. Let's see. So, CJ, you opened a short already. Okay, I could see that short from that SFP there, knowing that we could make a lower high here in your Y wave. And the reason why, guys, is because we did touch the 0.7 here. If you pull a Fibonacci from the lows to the highs of this little move, and you just look at your 0.7. So let me just do this. We'll do this, and we'll put a 0.7 there. You did touch that 0.7, and in a Y wave corrective move, a 3-wave zigzag in a Y, if you come down and hit that 0.7, it is more likely not to take out the high. Not guaranteed, more likely to not take out the high, and then you could see the breakdown. But I still think we're going to come take out the high just based off of this little mini push here, and based off of the higher time frame money flow, or medium time frame, like the 4-hour. Yeah, CJ, I love Jason, man. So, guys, I started into crypto in like 2019, and like many of you, I knew nothing. I bought the top of a cycle. I got wrecked. I had to learn the hard way many times how to trade. Wrecked some accounts, and I've never taken a course in my life. I have learned only through watching people's live streams and learning over time. And learning the right people to follow is important. But my first trader that I followed, and he became my mentor, and actually a friend of mine, was Bitcoin Hyper. He has a YouTube channel. He's very good. Well, I shouldn't tell you where he lives. I became a mod for his channel. I would visit his live streams. He would do live streams every single day for years upon years. He taught me a lot about pattern trading. He taught me a lot about volume, not volume so much, weekly levels, daily levels, different stuff like that. And then I found Jason when Bitcoin Hyper stopped trading as much in 2020. I really found Jason in 2020, and I started watching Jason's live streams. He used to do them daily as well. And I joined his Discord, his premium Discord, and I just what Jason taught me, because I knew a lot of the TA and I knew pitchforks before. Pitchforks are something I kind of developed on my own, guys. I knew the pitchfork tool, obviously, I didn't develop, but I developed a strategy with pitchforks that is really my bread and butter. And if you know about Jason's Discord, I'm known as the pitchfork guy and the channel guy, because I really like channels as well. But I was in Jason's Discord, and Jason taught me about CVD and open interest and CVD divergences and really order flow, because I didn't know anything really about order flow before entering Jason's Discord. And I learned, and I just learned. Also, I had Market Cipher B before knowing about Jason, but I didn't really know how to use it. And Jason is a pro at using Market Cipher B. In my opinion, he is better at using it than Crypto Faces, the creator of it. I know that's a hot take probably, but in my opinion only, and then Jason became a really good friend of mine. We would talk in the Discord. I would DM him sometimes, and I became a mod for his YouTube channel, and I would watch him for years upon years. And I was even at the beginning of this year doing private live streams in Jason's Discord. I was going to become one of his coaches in March, but there was a little bit of politics going on, I guess you could say, and that didn't end up happening. Jason was actually the one who encouraged me to start this YouTube channel. He said, Divine Hood, you are good enough. You could start your own channel. You could get, because a lot of people would ask me in Jason's Discord every single day about my TA. I'm in one of his advanced groups in there. And so I listened to him, and I started it, even though I knew nothing about YouTube. I still barely know nothing about YouTube. That's why if you guys watch my videos, there's no editing at all, because I don't know how to edit really. Everything is just off the top of my head, first take, throw it down, and then publish it. Yeah, and so I started my own YouTube channel. While I was starting my own YouTube channel, I was also streaming in Jason's private Discord for a bit. And then eventually I told Jason, hey, man, like instead of streaming in your Discord, I'm going to start streaming on my own YouTube channel. And he supported me all the way. He told me it's the best thing to do and to build a community of my own. And I'm still in Jason's Discord. I love him so much. He's one of the best persons, not only a good trader, but just a good person in general. So, yes, to answer your question, yes, I think Jason's a great guy, and he is a mentor, and he's a really, really good trader, guys. He is a really good trader. And Curtis J, welcome in, man. I'm doing good, man. How have you been? Okay, Christmas might be red. Yeah, I think Christmas could be red as well. Bonk. We can look at Bonk. Who's Jason? Jason Casper. CJ, it's called Jason Casper. Let's see here. If we go to YouTube. So This is Jason here, Jason Casper YouTube channel. He was just live right before I was. The other one that I learned from was Bitcoin Hyper was my first teacher. Anyways, guys, all of that to say, I've never taken a course in my life. I have never, I was self-taught with everything. And the pitchforks, I taught myself. Another guy that I highly respect is Coons Trading. And Coons is the best Elliott Wave guy I know on the planet. And I learned through Coons how to, like, the basics of Elliott Waves. And I also saw that Elliott Waves are also based off trends, right? Like corrective trends versus impulsive trends, stuff like that. And what I did, with my knowledge of pitchforks and then my now new learned knowledge of Elliott Waves, I went in and I developed a strategy of my own. And so, like, for instance, first of all, in our 2024 all-time high, we were hitting into our 1.618 Fibonacci channel. If you look here in 2024, we were hitting into this 1.618. Actually, I remember the day in Jason's Discord here, this day right here, BlackRock approved the ETF. We were hitting into the top of the pitchfork. We finally hit the top of the channel because you could see we didn't hit it in here, and we front ran it earlier in these last couple days. And the second we hit this, everyone was saying that day, we're going to see a 10K God candle to the upside because that daily candle was looking really good at that day. And I came into his Discord. I said, guys, we're about to see a 10K God candle to the downside. And sure enough, we got that big dump in one day of 7,600, but we dumped in like a week, $14,000, $15,000, $10,000. And it's exactly what I was expecting, a rejection from here to back test the midline. And that made me, really popular, I guess, in Jason's Discord. But also in 2024, when we were coming up here in March, everyone was expecting a breakout to 100K. And I was telling everyone, I shorted the loss of this. When we got above it, we formed a little bit of a 2-day range above it, 2-3-day range above it. Once we lost it, I shorted it. And my take profit was the back test of the channel. And so I developed my own strategy. This is a channel. I told you channels and pitchforks are my bread and butter. And by the way, as we were coming up here in 2024 to hit the 1.618 Fibonacci extinction of the channel, if you look at the total market cap, that same exact time, actually, no, that was different. This was at the beginning of 2025. We were coming up to the top of the pitchfork with confirmed bear divs, and money flow started draining out as this range was forming. And I told everyone, guys, I am taking profit on alts here, and I'm going to look for shorts, some swing shorts. And I got so much hate, even in Jason's Discord. A lot of people started saying, like, what are you thinking, Divine Hood? What the heck? But our total 3 market cap was hitting into the top of the pitchfork, and the total market cap was hitting into the top of the pitchfork, and then also when we came down here, I was looking for a major pump, and I put this on there like the day after. All this I developed on my own. I don't know where I got off topic here, guys. I got a little bit off topic. Total 3 market cap, excluding Bitcoin and ETH, we have lost our pitchfork. We have lost our bullish trend for all of 2025. We have lost this bullish trend, and we are chopping in this descending channel here. You guys can see, let me zoom into like the 4-hour chart. Chopping within this descending channel after your November 10th dump, we've started a descending channel, which means it's a corrective channel. But because now, if we pull our golden pocket from the dead cat, the crash lows to the dead cat bounce highs, and we look at that golden pocket, we have front run that golden pocket. And let me see if that's more than a 1. It's only a 31% move. So yeah, we have not front run. We have fallen below our golden pocket, and we have fallen below our 786. We've actually even touched the 886. So because we've touched the 886, it made it more likely to take out the lows of the crash. We have finally come down and taken out the lows of that crash now. You can see we kind of saw a daily swing failure pattern of that of those lows. If you go onto the daily candle, you'll see that's a daily swing failure pattern. And we're starting to form now a sideways range. Could be forming a sideways range here, right around those lows. But until we break this descending channel, I think this thing is going to keep grinding. And in a more bearish scenario, we could keep grinding here until we come down and take out the liquidity at 753 billion. Okay, let me read the chat here. Sorry, guys, I got way off topic. Massey33, welcome in, man. It's good to see you. Hot Tamale, welcome in as well. Guys, today's live stream, I covered a lot of information. I had some pretty good information in there. So if you didn't get it, if you came in late, I would recommend checking out that live stream if you guys have the time to do it. But yeah. And Travi Trades, welcome in as well, man. You can testify this. You've seen it all happen. Yeah, you've been in Jason's Discord forever too, man. Yeah. Thank you so much for doing this. Norm Swede, absolutely, man. Normal Swede, absolutely. And thank you for being here. Thank you for being part of this community. Jason Casper's the YouTube. Yep, okay. If we SFP the Friday highs, we might form some Wyckoff. Okay, wait. Are you talking about on Bitcoin here? And the Friday highs? Yeah, that's what I'm looking at right now as well. I'm looking at a flat correction in here to SFP those highs. But then I'm looking really for more of an impulse to the downside after that. But yes, we could form some sort of bigger Wyckoff range in here, like a tap 1, tap 2, tap 3. Actually, that makes sense. It's going to be like a Wyckoff range no matter what, because if we're looking for a 3-wave corrective move to take out those highs, and then we're going to impulse down a wave 1, your wave 2 often retraces to the golden pocket. Your wave 3 is going to break down, which could be considered the distribution. Wave 4, wave 5. It's pretty much a model 2 anyways, right? Because this is your range you're looking at. This would be your tap 1, your tap 2, your tap 3. But after the 3-wave corrective move ended, after this 3-wave corrective move ended, you're looking for an impulse down, a 5-wave impulse down. So both can be true, you know, that it's going to be like a Wyckoff range that formed. But this last hump of the Wyckoff range is just your wave 2 retracement in your last 1, 2, 3, 4, 5. And this impulse down is the distribution out of this range. So yeah, it's combining Wyckoff distribution. It's combining Elliott waves. It's combining bearish backtest of our trends, you know. Decrypto, thank you so much for that comment, man. You guys, I honestly want to see you guys win too. Like my goal here with this channel and with you guys and with my community is really to just build a community of traders that all like kind of get along with each other, all support each other, and all help each other win. You know, we all talk to each other, let each other kind of know the levels we're looking at and everything like that, and really develop a community that can dominate the market together, where we all can profit, where we all can grow and become independently profitable traders, but also collectively help each other to be even more profitable and more good. So that is literally what I'm trying to do with this YouTube channel, with my streams and everything like that. And for me, I am a guy who truly believes in some ways in karma. If you put out good into the world, you will receive good back, you know? And so I think service to others in some way, like if you get into kind of the spiritual aspect of things, service to others, if you live a life service to others, then you will in some ways get that rewarded back to you tenfold in some ways, you know? So and I'm not doing it to get rewarded, by the way. I'm doing it because I really enjoy this. I really enjoy just trading and talking with you guys. And so many of you guys are so supportive and so helpful. So it's great to be here, man. It's awesome. Okay. Yeah, God bless Jason and the plungers. That's so funny. Yeah, it's an inside joke. And actually, you know the joke that Jason tells on his live streams all the time of sitting on the toilet until your legs go numb? I remember the live stream. That was probably like 2 years ago. We were talking and Jason's like, you know, I go to the toilet to trade and I'm in there for like 20 minutes and people are asking me what I'm doing in there, if I'm okay, if I'm constipated. I'm like, well, Jason, I've been on the toilet so long that my legs go numb because I'm hiding in the toilet away from the family trading. And he laughed so hard by that. He got it so much because he's done the same thing. And he's like, yeah, Divine Hood's a true trader. he's and it's been a joke on his channel, like kind of an inside joke ever since. So man, I love it. I love those live streams. They're just fun, guys. It's fun to be with the community. You don't need to edit. This is very clear and important information. Yeah, well, thank you, Tiki Taku. Thank you for that. I know editing and making it fancy can kind of get more views or make it look more professional. And one of the reasons why I haven't created that pitchfork video yet is because I want to learn, like, for instance, Tom Crown, he puts out very nice professional looking videos with nice, like, where he can zoom in on what he's talking about and like kind of highlight the candles and stuff like that. So if I knew how to edit and put together a video like that, I would make those pitchfork videos and edit them up and put them out. But I really do want to, pitchforks are so fire. If you guys have been following my channel for any length of time, you guys will see that pitchfork levels are highly respected. And it's based off the trend, and the trend is your friend until the end. So I do plan to put that out. We'll see when it happens, guys. I don't want to make any promises to anyone. Okay, let's look at some of these DApp passive. We can look at AVAX and Doge. I also need to look at Bonk real quick. All right, audio dictac. Is that a editing audio did act? Auto did act. Okay. Not sure what that is, the normal Swede, but I'll look into that. Okay. Yeah, patience is key too, Tiki Taku. Yes. Okay, guys, I'm sorry. I'm way behind in this chat. Yeah, CJ, I love you guys, man. It's great. Could you go over how to pull your pitchforks, like significant events, swing high, swing lows, or fib level? Yeah. So I'll just give you a little bit of a quick like lesson right now on pitchforks. What's really key, and let me find a really good spot in the market. When you have a pump up, an impulse to the upside, and then you retrace to a golden pocket. So let me get to a clean chart here. Let's do the big get chart. Yeah, okay. So this big get chart. Let's say you have like an impulse to the upside, and then you retrace to a golden pocket. So let me find one where you kind of impulse up here and you retrace to your golden pocket. Yeah, see how we retrace to the golden pocket on this kind of little dump here? We had our little mini range, and then we impulsed up, retraced to the golden pocket. So obviously that low was a significant low here. And then you go to the high of that move, of that impulse, and then you put it down to the golden pocket. If your higher low is in the golden pocket, it's a very key higher low. It bounced from that reason for a level. Golden pockets are levels. Now, because this impulse could be ending and we're about to go sideways in a range, we didn't know at the time we were going to go sideways in a range, but this impulse 1, 2, 3, 4, 5 was ending, or at least you could have in a fifth wave, you're looking at your modified skiff pitchfork. So if you come in here and you go to settings and you look at you have original skiff, shift, whatever you want to call it, in the modified, right? So you see in the modified, oftentimes your fifth wave will reject around the top of the pitchfork. Similar to what Bitcoin did in a larger time frame. Let me just show you this. So this was our third wave, right? A significant swing low within this flat correction. This was a very clear impulse. This was the high of the impulse. So you're going to put your first pivot of the pitchfork here. Your second pivot is going to go on the high, and your third pivot is going to go on the low of the correction. And this was our range correction of 2024. So you can put that on there. And now that we know in the cycle, this was likely to be a wave 1, a wave 2. This was our big wave 3, and we knew that this was a wave 4. So we were expecting one more fifth wave to the upside, one more impulse to the upside, right? And within that impulse, your fifth wave generally isn't going to go as aggressive as your third wave. So you don't want to use an original pitchfork, because original pitchforks are like trying to find the tops of third waves, not the tops of fifth waves. So if we would have looked at original, you know, you can see it was too aggressive of an uptrend. In the fifth wave, you can look for Bitcoin in particular likes the modified skiff pitchfork in a lot of the time, and you can see it had some respect here. But on like this, okay, this one was the skiff pitchfork. I thought that was the modified version, but maybe that's on the total market cap one. But in the skiff pitchfork, you can see that the trend is getting close to the end of this impulse, right? So this is the last leg up of an impulse. And oftentimes that last leg, that fifth wave, will end at the top of a pitchfork here. And so you can pull it from those key swing pivot points, high, low, higher, low, low, high, higher, low here. And oftentimes your fifth wave will end at the top of a pitchfork here. And your retracements will be to one of these major pitchfork levels, by the way, on those retracements. But you want to pull it from key swing points, right? And in a bearish pitchfork, you're pulling your bearish pitchfork from a high to a low to a lower high. And that is your bearish pitchfork, right? Very similar. Let's see. I think I have a bearish pitchfork on. Gosh dang it. Let me get past all of this. Was it Ethereum? No. SUI. Okay, so SUI, we had this really big push to the upside, really aggressive push to the upside. And then we were looking for a corrective move. And this push to the upside, this could have been the end of the correction, and we could have continued to push up. But that would have been like a super cycle, right? Like a big 1, 2, 3, 4, 5. Or you could even look at this as a 1, 2, 3, 4, and then a fifth wave in here. But this, and by the way, it still could be that count. We could still be looking at this as a wave 1, a wave 2. All of this was a wave 3. This is a big wave 4 flat correction before seeing a fifth wave here to end SUI's bull market if we're going to see some sort of super cycle. But this was clearly an impulse to the upside. So after that impulse ended, you have a key swing high in here because you had multiple dumps. You broke market structure bearishly. So now you're looking for a downtrend because you broke market structure of this range bearishly. And after that downtrend starts and you get a key higher low on the charts, you can say, okay, this is your first pivot. This is your second pivot. And then you see we had that 3-wave corrective move. Oftentimes that 3-wave corrective move will come to take out these highs or reject from like your golden pocket 786. I believe that rejected from the 886. But this is a key lower high. And so now we can pull that pitchfork on those 3 key pivots, high, low, lower high. And now you're going to get the trend that this last corrective wave in your A, B, C corrective move could happen. And sure enough, if we look at this bearish pitchfork, you know, look at how well it was respected. You chopped your upper band, held for a few months, and you kind of formed all these 1-2s in here. You dumped on the big crash day, but you can see the midline held. Yes, you had some wicks past it, but the midline held, the candle bodies held for, you know, a couple weeks. We lost it. And by the way, guys, when we rejected here that day, I told everyone, expect to drop to the pitchfork lower band. If you look at what day was that? That was a Sunday. So go check out November 26th video or like the live stream on November 27th. You'll probably see that I talked about that because that was a bearish backtest. Oops, didn't mean to do that. That was a bearish backtest of that pitchfork midline. After you lose it, you generally will see an immediate low time frame backtest. Then you'll see a higher time frame sometimes, not always. But we lost the pitchfork midline. We came down to the lower band. Nice bounce from the lower band. Rejected the value area low. You know, saw a bounce from the bottom, but it was only a small bounce before losing it. And you can even see we bearishly backtested it with this green daily candle. Rejected. Now we're at the bottom here. There's a lot to go through, Tamale, with pitchforks. So, yeah, that's a thing for a different day to get really, really into that. But, yeah, 30-minute continuation, hidden bull divs. Okay, we are printing some hidden bull divs. Yeah, I do think we're in a 4th wave correction before going up to take out those 93.2K highs. I'm looking at this locally, 15-minute chart, as a potential little 5-wave impulse in here. 1, 2, 3, 4, 5. So I'm looking at coming down to that value area high VWAP, and it's also our 0.5 Fibonacci, which is our wave 4 corrective target. If we pull it from the lows of 3 to the highs of 3, we look between the 382 and the 0.5. That 0.5 is right there. So that's kind of my sweet spot. Now, we don't have to come down there. We could actually bounce from this 382. And the reason why is because, look, we have some liquidity resting right around there, these little lows here. Jopfield, thank you, man. You look forward to the live streams every week. Can't wait till I have my own Discord, and appreciate you. Thank you so much for that, man. I'm glad you keep learning, and you've been one of the most awesome, loyal, and supportive people here, too. So thank you so much, Jopfield. I appreciate that. And Decrypto, thank you, guys. Yeah, to the dollar secret to the dollar levels. You're raising attitude. Thank you, Decrypto. You guys, I just appreciate you guys. You guys are making me feel good right now. Yeah, and you can do this. Every one of you can do this. Psychology is a huge part of trading, guys. Psychology is a huge part. Once you learn the TA, yes, it is. You will not always be right on the TA. Even if you get the TA completely right, the market does its probabilities. The market won't always do what you think the TA is validly saying. So that's where it comes into risk management and discipline. Yeah, I do the same thing. I can spend hours on the toilet, but my family's used to it. Oh man, normal sweet. That's so funny. Yeah, let's get into some of the auto dictate act is self-thought. Okay, thank you. Thank you for that. Yeah, and Matthias Jorp, thank you so much for being here, man. I really appreciate that comment as well. Yeah, let's get into some of the altcoins, guys. We enjoy you, as we said before. You're a great teacher. Thank you, guys. Honestly, Dr. X, all of you guys, thank you so much for these comments. I really appreciate it. Yeah, okay, I'm an auto dictac. I didn't know that word, but it seems like a lot of you guys know that. So thank you. That's interesting that, yeah, self-taught on a lot of things, guys. Okay, yes, and you're teaching me words, so thank you, man. You see? This is why a community is good to have, guys, because not every one person knows everything. And if you build a good community of good people, they can all help each other grow. And I really do think that is it. So real quickly, let's go into, we went into Ethereum real quick. I just want to talk really quickly about Solana. We're going to go into Bonk. We're going to go into, shoot, what was the other one? We'll go into ADA, Bonk, and let me check. There was another one here. Super. Actually, I'm going to do Super right now because we talked about that at the beginning of the stream. And I'll go through these pretty quickly, guys. Jawfeel, so we are now trying to reclaim this golden pocket. Actually, man, if we can reclaim this golden pocket, like we did have some really nice bull divs here coming down here, bull divs. And now we're starting to reclaim the golden pocket. This looks like a corrective channel to me. This descending channel in here that looks like, actually, let's make it not to that one. Let's do this. Let's go take the lows and then we'll bring it up to that high. Yeah, and is that an old daily level? Let me check that real quick because we're at a daily. Yeah, we're at daily resistance right now. Now, the thing is with Jawfeel, with Super, because it's such low liquidity, you get these giant wicks. And this is why Super is hard to trade, unlike Bitcoin. Look at all these giant wicks, which can stop you out and invalidate your trade idea, even though you were right. So Super is really, I'd say it's a bad coin to trade, unless you're trading at spot, just because of this low liquidity wickage that you can get stopped out, even if your plan is right. So just want to give you that warning there. I know you're aware of this. I know we've talked about this in depth in the past before. But Super does look like it is starting to try to reclaim that golden pocket. And yeah, I don't like that channel, actually. I don't like that too much. Man, yeah, if anything, so we were forming a little bit of a range down here underneath your golden pocket. And remember, when you lose a golden pocket, you'll backtest it. If you backtest, you make another low. In this case, it was like a double low. We formed a bit of a tight kind of triangle. in here and we broke that to the upside, now this does look kind of like a corrective channel in here. Not perfect, but if we can close our daily candle above that 618, let's zoom out to the 8-hour chart. And above this 618 here, remember this 618 is also a daily level that our candle is below right now for the day. But if we can start to close above this golden pocket, we might be able to see a bit of a move up here. I don't like how this low didn't see bull divs on the daily. You can see no bull divs on the daily, no bull divs on the daily here either. Yeah, maybe very slight bull divs here. And also no bull divs in here yet. So what I would say is it's likely that we're going to form a range, kind of a bottoming range in here, and we might see one last low to come in here, and then you could see that bigger kind of accumulation range that we were looking at a little bit higher. But I still think that 15-cent area to 14-cent area is a major area of support. It's our 1-to-1 corrective target. Yeah, because we're looking at this as being a bigger 3-wave corrective move of this entire impulse here. But super is a little bit confusing, a little bit harder right now to look at trading this. Let's go to the 2-day chart. The thing is here, Joffiel, with this, you can see in here was a quick move up. So we busted through that daily order block. We had a daily order block in there. That one daily order block, which, guys, an order block is just a red candle smashed in between a bunch of green candles. It's often where the point of control of a mini range is. So order blocks do work, but look at, even on the daily time frame, there's no real order blocks in here. There's nothing really on higher time frames to suggest a macro bottom. Maybe the value area low of your accumulation range. So let's throw that on. That's our accumulation range of the bear market. That's your value area high. So now let's scroll over and see, did we touch that value area high yet? No, we have not. So I would suggest that overall, the overall downtrend is likely to continue at least until we hit that value area high there. But once again, we might be forming a little bit of exhaustion in here. So you could even do this and create, like that left shoulder, head, right shoulder, inverse head and shoulders. Or it might come a little bit lower into that 1-to-1 target in your macro 786 Fibonacci. As far as our lower time frames go, let's just zoom into the 1-hour chart. I would just, if you're looking at trading this, by the way, I don't recommend that because of this liquidity, these wicks here. I would just be trading this range here. And maybe you could even combine them. If you start to drop, you can combine it into the bigger range like I was just talking about. So you can pull this volume profile here. Yeah, we rejected the value area high, and now we're losing our daily level, which, remember, that daily level was right at, let me get rid of that, was right at our 618, which is where your POC of this range is as well. I mean, this is really wicky, so you could be looking at this as a 1, 2, 3, 4, 5. Now you're going to see a 3-wave corrective move to your golden pocket, and let's pull that golden pocket. Golden pocket is right around the value area low of your little range. So this area, 24.3, could be a little scalp long opportunity, but you want to see this have a 3-wave corrective move coming down here, and you want to see volume getting kind of lower and lower and lower as you're coming down to this golden pocket. I would also want to see like 15-minute bull divs as we're coming down there. So you would be looking on low time frames, 12, 15-minute chart, if you're making bull divs, which right now, I mean, we're still far away from that, but you can see value area low, golden pocket. So if you're afraid this thing's going to take off without you, you could look to enter a trade in this general area. For me, though, unless we close the daily candle above that 618, and it's at like 26.5, I do think we're going to continue either chopping within this small range for a bit or continuing down overall. Okay, let's see, super. Let me just go through Bonk really quickly, guys, because I know that was asked at the very beginning. Geez, Bonk is, let's see, is there a better one? Well, we got that pushed down. Yeah, we're looking at, that was the prior value area high. We're looking at this big range up in here in Bonk that goes back to December of 2023. So almost 2 years long now, 2 year long range. And we're below the value area low of that range. And at the beginning, was looking like a corrective channel, but obviously we dumped really hard. Now, I don't know if all the exchanges dumped that hard on Bonk, but to me, this looks like this could be a wave one, a wave two, a big wave three in here. Your dead cat bounce was a wave four immediately, and now we're going to just continue to grind down in a wave five, maybe all the way to this daily. Now, that's a long drop, guys. That's a very long drop on Bonk. But here's the thing. Your lows here, you've taken out your lows. You've taken out the liquidity of the range lows. You saw a small move up, but you're rejecting the bottom of the channel right now. And today, even, you're rejecting the bottom of the channel. So I would not get bullish on Bonk until you start to break above this value area low. Because if we pull the range to current day now, you can see the value area low is also the bearish backtest of this original channel that we lost. So I would be waiting if you can start to close daily candles above 0.000104, this level, then I would look at potentially seeing a bigger move to the upside. But if you reject here, you are going to continue lower. And if we pull our golden pocket from the lows of the dump to our dead cat bounce highs, we look at our golden pocket 786, and I'm going to put that on log scale. We're going to be looking at that level, these levels here. So at the very least, you could be continuing to grind here until you see a bounce, and then that could be like a lower high. You could see that, like because within your fifth wave, if this is a 1, 2, 3, 4, within your fifth wave, you're looking for 5 waves. So you might bounce from the golden pocket, come up, golden pocket, reject, something like that. Honestly, Bonk, guys, there's no use case for this coin anymore. It was a meme coin. Do we have anything in here? I mean, you could look at this little range in here, and you could pull the volume profile of this little range. But let's look at some anchored VWAPs here. Yeah, you're even below your anchored VWAP from the lows. Man, this is really bad for me. I think that, yes, you are towards the bottom of a 2-year long range. Until you reclaim the value area low, you have to remain bearish on this thing. So I would not be looking to enter or buy spot on this, even though you're towards the bottom of your range, until you reclaim that value area low. Now, if you start to reclaim that value area low, we also do not have bull dibs. You need one more low to make bull dibs here, even locally. Because see, if we can come down here and make another low, then we could get some bull dibs on the chart on the daily time frame. You'd also want to see that daily money flow bottoming out. So to me, it's likely that we're going to reject where we're at right now and continue down a little bit lower. And maybe continue down to that golden pocket. Now, ADA, guys, is very interesting. And excuse this chart. I'm very sorry for this chart. I don't keep an object tree on ADA because I don't really trade ADA. So all my levels are kind of on the chart still. But if we're looking at this bigger, at first, this was kind of our bear market accumulation in here with a bit of a deviation of the range right here. And then, of course, we had our upper range, and we lost our upper range, and we're distributing to the downside. But if we're looking at, and the thing with ADA that is scary is that this does look more like a corrective move in here. That looks like a corrective move overall, making a lower high. And now we could expect a dump back down at least towards the bottom of the range, right? So if we look at ADA, you are coming down to your one-to-one target. Let me just delete some of this stuff in here. So you can see your macro 786 Fibonacci pulled from the bear market lows to the highs that were of 2024 in December. That's your entire push up. Actually, that's not your bear market lows. That's your 2024 lows, your range lows in 2024. But we are at that 786, which also happens to be the point of control of your macro volume profile. I think last week when we looked at this, I did say that this was a level that could hold. And it's also your one-to-one correction. If we're looking at this as a bigger zigzag correction here, and we're going to see like a W, X, and then we could see a Y coming up to take out your highs, or because we actually hit past the 0.7, you could make a lower high here in your Y wave, a larger complex correction on this thing, multi-year corrective move. I would just say we were at some major support this last week. If we lose this green box that I have on the chart, it's the value area, point of control of this small range. There was a monthly level there. There's your macro 786 in there. And I believe there was something else in there as well, a naked monthly point of control. If it goes back that far. No naked monthlies in there. All right, let's just zoom in on this and look at it for now, because we are at a support level right now. Let's get this out of the way. Yeah, and here's the thing, guys. Our market structure is still really bearish on this thing, right? We keep making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Now we might have our first sign of market structure break if we can bust above this high here. Above us, we have a naked weekly point of control in confluence with your 0.236 fib in a daily level at between 46 and 48 cents. But we have to watch for a bigger flat correction in here, just like, and then come back down, or at least come back down and form this bottoming reversal pattern. So watch for the SFP of these highs right now. What is that? 43.9. One, two, three. Yeah, because look at after this big, man, this thing is just looking really bad actually, because all of these could be considered 1-2s in here. 1, 2, 1, 2. All of this could be considered your third wave. And then, and let's look at the volume to verify that. Yeah. I mean, you did have your big spike at the beginning of the third wave, and you do have some big spikes in between, but now volume is starting to get lower and lower and lower overall here. So I would say you're starting to get exhausted on this move to the downside. You might be able to see a bigger bounce first, but here's the thing, because you saw all this grindiness at the top, you got your big flush down, you might now start to see some grindiness at the bottom here as well. What you want to see is a break in market structure, a bullish break in market structure. Remember, market structure is king. So if we break above 43.9, you're seeing your first big break in market structure. Okay? So if we break above, even if it's an SFP, we now can look for a higher low and kind of form that left shoulder, head, right shoulder, inverse head and shoulders at your major support of the point of control of a 2-year long range, a 3-year long range, I think this was. If you don't SFP this high, then I do think you're going to come up to your naked weekly point of control at 46.59. And the reason why is, look at, these are kind of fair value gaps in here. You have a couple fair value gaps. Fair value gap here. So if you don't SFP this, you're likely to fill these fair value gaps right into that naked weekly point of control. Let's look at naked weekly points of controls and make sure there's no new ones. Yeah, there's nothing in here. Let's look for naked dailies in there. Come on. Yeah, nothing in here, guys. So I would be, if we don't SFP 43.9, we're likely to continue up to 46.6. Liam, thank you so much for that comment as well. Appreciate all of you guys. I'm starting to lose my voice here. Please. Let me drink some water. Officially about your mission on super. I see what you're saying. The wicks are always to the upside. Yeah, and that's another thing, Jaffiel, with all those wicks to the upside, that means that every single push to the upside is getting sold off. And it's probably getting sold off by those big whales, those coin holders, maybe even like IPO guys or, whitelist guys. So I would just be careful with that thing, man. It looks like every single pump is getting sold off immediately. All those wicks to the upside. I would wait for a real range to form, and you might have to be patient and wait for a daily range to form before starting to get in. And you probably want to see a break in market structure. Same thing with ADA, by the way, guys, because ADA has been in such an aggressive downtrend here. What you want to see is you want to wait and start to see a range form where you break market structure bullishly. After you break market structure bullishly, now you can look for a higher low on the charts, and you're going to look at a level where there's like a golden pocket in confluence with like a daily or a naked daily point of control, and that would be your level to get in. We do have a new daily level right at that POC. That's nice at 38.5. And let's look here real quick on the... Do we have a naked daily down there? I wasn't looking. Yeah, we have a naked daily below it. That's pretty far down. Yeah, let's see if we take out those highs and SFP those highs at 43.9. Yeah, see, a lot of announcements today. Trump announced Powell's successor. Wow, he's dovish. Also, well, of course he's going to act dovish no matter what's happening because he wants to be dovish for Trump's, administration and stuff. Both these events would start a super cycle. Yeah, let's see, man. Like, macroeconomics does affect us, so for sure. Yeah, I see it kind of as the end of 2021 as well. It does look like we are about to go into a bear market. I hate to say that, guys, but yes. Yeah, and ADA might grow in the future. It might. So the thing is, if you're bullish on it, spot, you can start to look to accumulate. By the way, we're of this flat range that we're developing at the bottom. You're above the value area high, which is nice, and you can see your point of control here is going to be right where your VWAP is. And once again, if we're looking at a 5-wave impulse, 1, 2, 3, taking out those highs, and then you might see a 4th wave. This might be your little scalp entry to bring up to your naked weekly point of control. Let's pull well, the 3rd wave might not be done yet, but right now, if we pull it, yeah, I mean, it is between the 0.5 and 382, but if we came a little bit higher and SFP that high, you can see that 0.5 would be right around there. So you might be able to get a scalp long opportunity from this general area and bring it up to that naked weekly. That's a 14-to-1 risk reward ratio. That's really good. And then, if this is the bottom of a much larger range before a much bigger move, you reject here, you come down to your golden pocket. This area right here could be a swing long opportunity. I just, with Bitcoin more likely to continue to make new lows, I think we might come down into this area. It's more of a macro support area. Okay, what was the next coin? Let's see. We did Super, we did ADA, Solana. Guys, Solana is bouncing from the value area low, and I covered this in yesterday's video. No, what am I doing? Okay, So Solana is really trading technically as well, but we're forming this range. First of all, we rejected from the top of the pitchfork and our weekly level in our macro 786. I showed you guys this last Friday. We've worked our way down through the pitchfork and we're in the lower band. And oftentimes you will form ranges in and around these bands. But we're also, if you look at our volume profile to March of 2024, so almost 2 years long now, we're at the value area low of our range. And we took the liquidity of this higher low here. We took out this liquidity and we're at the value area low. Money flow does not look the best. And yes, we could drop to the bottom of the pitchfork. If Bitcoin keeps dropping, so will Solana. But I did say it's likely here that we form a range between the point of control and the value area low. And we could see that accumulation start to form in here over the next month or 2 months before ultimately breaking this to the upside and seeing a nice little altcoin season, or breaking this down. If we come out and we take out these highs again and then have bear divergences, I think we're going to break down to the bottom of the pitchfork. So right now I'm focused on trading this range. Last Wednesday, right before Thanksgiving, we shorted 144.6, or right around 144, based off taking the liquidity into our point of control with bearish divergences confirmed. Right here, we shorted that. And I posted about that in the Telegram as soon as the stream ended. I told you guys I was entering short. And I told you guys our first take profit was at the golden pocket, which was right here at 130, 129, the bottom of the pitchfork band in confluence with the golden pocket. We busted straight through it. I still had a limit TP order there of 50%. I took another 15% last night, I told you guys, at the value area low of the range. And we're bouncing from the value area low. But I would say this, our overall downtrend, we're in a downtrend. Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Because we hit the 886 Fibonacci here, pulled from the low to the high of this little channel. Let me go ahead and show you guys that. Actually, I'll get rid of this one and we'll look at this golden pot. Because we hit the 886, you see we are bouncing from the 886, which often bounces in ranges, guys. And if we are, it does look like we're forming a sideways range here. So the 886 will often bounce you. But because of that, we're looking for a potential lower high or just grabbing the liquidity of the highs of the range again before continuing the overall downtrend. Because in a larger downtrend, if you hit the 886 pulled of the last corrective move, you're more likely to continue to take out that low. Yes, we could come up and take out the highs first again. And the reason why is because this SFP was a really weak SFP that didn't stop out many traders. You can see now we have kind of triple highs here. Here, here, and here. All triple highs. Not really an SFP. Your stops are going to have a little bit of breathing room above. So I would think that we might continue pushing up a little bit higher. And our next resistance area, that 152 area, now golden pocket, it was also kind of the lows. It's an important support resistance flip area as well. Yeah, I'm looking for the SFP of these highs again. Let me just do this. And if we come up there SFP with bear divs, or even come up a little bit higher to the golden pocket and reject with bear divs, I'll be looking for shorts from up there just to form a little bit of a low range. Now, here's the thing, guys. If we do break above this POC and close a daily above it, we're likely to come up to golden pocket. We might reject only to come down to backtest POC before coming up to your next major level. This is major resistance. This purple box between 171 and let's say 175. And the reason why is both our anchored VWAPs are there. This is the anchored VWAP from the all-time high and the anchored VWAP from our $96 lows. It's also some very key liquidity up there And it's also your pitchfork midline's just a little bit above that. So on a larger time frame, if we do start to impulse up here and hit into this general area and reject, you could be seeing a bigger bottoming reversal pattern in here, kind of like a left shoulder, a right shoulder, and then another left shoulder here, something like that. Or this could be the left, this could be it, you know. But we didn't really see bull divs down here. Actually, we were seeing some bull divs down there. Wait. No, we weren't. Sorry, I'm going to retract that again. Yes, we were. Okay, I'm sorry, guys. I've been streaming for a while. Lower lows here, higher lows here. You can see that is higher lows. So we saw bull divs into your value area low. And even locally on NAMI, between these two daily lows here and here, bull divs and money flows curving to the upside. Man, I hope we didn't catch a swing. This could be a swing long opportunity down here. So we did bounce from the 886. So yes, we might come down and take out the low again. But if we get near the bottom of this range, what I would be trading on Solana right now, with the possibility that we could break out of this range and come much higher, is just looking at playing this range. All the price action below the POC, in between the value area low. So now you can see our value area high is coming up to key resistance, right? Value area high, swing failure pattern. The value area low is going to be at the bottom of the pitchfork band. So if we do something like this, break above and then retrace to this golden pocket area, which would also be your value area low and pitchfork, this 131 could be a very good swing long if this thing is about to break up. Mark, welcome in, man. It's good to see you. Hope you're doing well. Told you last week I'm not paying for your child. Dang it, Mark. Come on. You said you'd give me some money. No, that's not the wrong chat either, dude. BTC 75 is also the top of 2021. Real retest would be beautiful. Yeah. I mean, guys, on Bitcoin, I'm just looking for as far as the larger time frames goes, that possible move down. Let me get rid of those. In a C wave, we're looking for a 5-wave impulse down, and right now it's a double 1-2, but we're looking for this bigger 5-wave corrective move, and 70K is going to be your golden pocket, pulled from the 49K lows all the way up to your all-time high. It looks like we could come down there. Maybe we don't, though. Maybe we just SFP 70.4 into the bottom of the band and move up and front run the golden pocket again. Remember, we front ran the golden pocket right here. If you pull that same golden pocket from the 49K lows to your current all-time high at the time, we had front run that golden pocket. So maybe we're going to do it again. Who knows? But anyways, guys, I do need to get going. It's I didn't get to cover everything we wanted to cover. Mark, I know you just got in here. I'm sorry, man. I've been streaming almost 3 hours now, and I have a couple things to do before I got to get the kiddo. So, guys, I will see you Thursday, 2 p.m. Eastern Standard Time. Please hit the like button on your way out. Thank you guys for everything. Remember, if you do want to join the Telegram, just sign up with BYDFI using my affiliate link, deposit $100 into the exchange. Once you've done that, you can click the Telegram link in the description. Once you're in the Telegram, type in /verify and then your user ID, which will be right up here, and that'll get you access to that Telegram group. If you do want to ask me a question there, make in the general chat, just make sure you tag me so I can see it. And I appreciate you all so much. You guys made me so happy today with your kind comments and everything. So love you all so much. And Mark, love you too, man. Thank you for coming in. And I'm sorry I'm leaving it like as soon as you get here. But I'll see you hopefully on the next one. And have a good one, guys.